गुड आफ्टरनून क्लास। आई होप आप लोग सब अच्छे हैं एंड द टॉपिक ऑफ टुडे इज क्लबिंग। ओके, जस्ट अ सेकंड। ओके, व्हाट इज क्लबिंग? इफ एनीबडी हैज एनी क्लू अबाउट व्हाट इज क्लबिंग, बिकॉज आप जब व्हेन यू सी द सिलेबस you will not find any chapter called clubbing, but we popularly call it clubbing. So what is it? Add 2 persons income, include, join overall income. Okay. Is it a family kind of return that you're filing? Please let me know your thoughts in the chat box. Is it a family return that you are filing when you say add 2 people's income? And just give me 2 minutes while you think about it. Clubbing means mixture of incomes, of various incomes. We include minors' income and parents' income. So you mean to say clubbing only happens in family situation? You include your uh, wife's income or minor's income, and it cannot happen in any other situation, right? Related party. When we have the ownership or control of any income. Okay.
हेलो। हेलो। ऑडिबल? अब ठीक है। ओके, सॉरी फॉर द लिटिल disturbance. All right. So I have got all your answers, and I will just quickly touch upon what y'all are thinking. Y'all are thinking basically on the right lines, that clubbing means, you include somebody else's income. To that extent, you're right. But when you say that it includes only your family's income, your wife's income, or your husband's income, or your minor child's income, to that extent, you are not completely correct. Clubbing just does not happen in family situation. In other countries, there are concepts of family returns also. That is a family together, not an HUF. A family as in husband wife together, they are not a separate legal entity together, but they can have the status to file a return jointly. This is not what we have in India. We have to file our individual returns, but there are some provisions which are there to basically curb those situations where one person is trying to divert his income. So if it is preliminarily, it is supposed to be your income, but through some ways you are trying to divert it. You are trying to push it to somebody else so that you get some tax benefit, you get some slab benefit, because each one of you have individual slabs. So you feel, I have too much of income and there is another person in my family who has less income, let me push that little bit of income there, so that both of us can enjoy our slabs and we overall pay less tax. Also, in our country we have a progressive system of taxation, so our tax rate on individuals keeps increasing as the income keeps increasing. Even in this situation, you may want that, okay, I am already in the highest tax bracket, let me push such some income to somebody else who enjoys a relatively lower tax rate. Okay, so that overall we are paying less taxes, right? So in order to curb these situations or these practices where one person is trying to divert his income to somebody else to take some tax benefit, there are provisions in the law to club that particular income back in the hands of the person who thought he was playing very smart. Okay, so one person is trying to, I am trying to push my income somebody somewhere else, and law is saying you push your income, the other person will enjoy the income, but you only have to pay tax. So in our eyes, it was always your income and you should only pay tax. It is going to be clubbed back in my hands. This is what we call clubbing. Okay, somebody, I tried to push the income, it is coming back to me. This is what we call clubbing, right? Now when we talk about this, there are various sections, broadly section 60 to 64 of your income tax act, which deals with the clubbing provisions in total. Okay, and they cover various situations. For this purpose, GAR introduced. So, sir, GAR has a lot of implication. GAR is not just for clubbing. Moreover, if there are anyway, if there is anyway SAR, if there is anyway specific anti-avoidance rules, then GAR may not be needed, right? We have clubbing provisions since a long time. So GAR came later. And obviously, judicial GAR was always there. Judicial GAR means when the court sees justice and tries to interpret law in a way, even if it is not written in that way. Okay, so that was always there when courts applied their mind, and perhaps that kind of judicial GAR gave rise to a lot of changes in the tax law. But this one is specific provision in the law. This is not GAR. If you say it is GAR, then it involves a lot of subjectivity, and one person needs to apply his mind whether or not it falls in GAR. But what we are talking about is specifically laid down as a rule book, and we do not need to apply our mind. Okay, where specific clubbing is not there, GAR applicable. It is not just for clubbing, it is for the entire income tax act. If you are trying to do any anti-avoidance which has certain conditions which is mentioned in the GAR rules, then that applies. But we are digressing too much, and right now we should cover the clubbing provisions which is specifically laid down in the law. Okay, GAR for now, please do not divert and you do not get yourself distracted, because if you see through that lens you will doubt everything. But here we are only trying to cover those things which are specifically laid down in the law. Okay, okay, all right. So 60 to 64, these are preliminarily the sections which talk about clubbing, right? One is section 60. Section 60 says transfer of income without transfer of asset. Okay, transfer of income without transfer of asset. So I continue to hold one asset, say a fixed deposit, say a house property, and I have through some means diverted the legal right to receive income from that asset to somebody else. So asset remains with me, somebody else gets the income. This kind of situation is covered by section 60. I will just broadly touch upon what we are going to talk about today, and then we will eventually do details of each category. Okay. Second is income from revocable transfer of assets, where we are also transferring some assets. So obviously, if the asset is transferred, any income in connection with the asset will also get transferred to that person. Where that is also involved and the nature of the transfer is revocable, then there is a certain clubbing provision. There are certain clubbing provisions when in case of income arising to your spouse, which can be husband or wife, or son's wife, but it cannot be daughter's husband. It is only mentioned as son's wife in the text, in the laws. Then clubbing of minors' income. So you have minor children, what to do with their income? They are not, major enough to pay taxes on their own income. So somebody has to pay tax. So it has to be clubbed in the hands of either one of the parents. And who should it be? That is what the law will say. And how should it be? And whether at all it will apply. What are the exceptions? In which situation clubbing will not happen? These things the law will tell you. And son's wife or with son or with in-laws. Son's wife with, when I say son's wife, okay, from whose perspective am I saying? From the parent-in-law's perspective, right? Right? So it is parent-in-law. Because for the husband, you will not call the person son's wife, right? It will be wife. So son's wife is from the perspective of parent-in-law. We are talking about clubbing in the hands of parent-in-law. Which parent-in-law again? We'll see. Okay. Then we talk about cross transfers, cross gifts. I give a gift to somebody else, you give a gift to somebody else, and somewhere we see that this is a planned mechanism of trying to even avoid clubbing provisions. Even then, clubbing applies, and this is through judicial guard. This is through a case law which has been pronounced by the Supreme Court. Okay. Then conversion of self-acquired property into property of HUF. So you have given a property to the HUF. Then what happens? How clubbing applies? What happens on partition of HUF? Then whether if income of some person can get clubbed with you, can loss of some person also get clubbed with you? This is also a question which has been answered in the law. And then what is the preliminary difference between 61 and 64? 61, which deals with revocable transfer of any asset by any person, and 64 deals with all transfers by individuals only, but in specific cases. So overall, we will cover all these things. If we are all on this page, that we have understood what we are going to study. We are going to study situations laid down in the law as to when one person X has to pay tax on somebody else's income also. Okay, and these are a specific set of situations given in the law. You have to apply only these and not think from your heart that, oh my god, no, this situation should have attracted, this situation should not have attracted. We are going to strictly read the letters of the law when we are applying clubbing provisions. All right, what is revocable transfer? Sir, let me come to that. Yeah, okay. As I said, this was a brief overview of what we are going to talk about today, but we are going to talk about each of these in detail now. Okay. Okay. So firstly, we are talking about transfer of income without transfer of asset. Section 60. If you have your notebooks, you can please take it out. This material is already with you, uploaded on the site, but you can take it out to write down your own points, your own notes, which you think will help you in revising before the exams. Okay, and I'm going to deal with questions periodically, not every now and then. So questions should come not in the chat box, but in the BOS portal. Okay, that's my earnest request to you all. Please put it in the BOS portal. If you think it has got answered in the course of discussions, then very good. Otherwise, say after every half an hour, I'm going to check that and I'm going to reply to you. Okay, so it helps in a flow that we can engage the other students also, and we do not get distracted, all of us, right? Okay, thank you. So transfer of income without transfer of asset, section 60, right? Here, what is happening? As we said, we are not transferring, one person is not transferring the asset, only transferring the right to receive income from the asset to another person. What to do in this case? That income which has gone to the other person rightfully belongs to the transferor, and it should be clubbed back with the transferor in that relevant assessment year in which the income has arisen. Okay. Do you need to check revocable, irrevocable without discussing what is this, what is revocable, what is irrevocable? Just by the meaning of it, broad meaning of it, understand revocable means which you can cancel, it can come back. Irrevocable means you cannot cancel, it is a permanent thing, it is gone. Okay, broadly speaking like that. It doesn't matter because you have not transferred the asset anyway. As long as the income is flowing to somebody else, that income was always yours and should come back to you. That's the simple basis of this provision. All right. For example, very simple example, Mr. A confers the right to receive rent in respect of his house property to his wife. So Mrs. A, without transferring the house itself. If Mr. A had transferred the house itself to his wife, who would be considered as owner of house property to pay tax on income from house property? If anybody can put in the chat box. I will repeat. If Mr. A had transferred the house property itself to his wife, okay, who would pay tax on income from that house property, whether self-occupied, let out, whatever it is? Mr. A. And is it because of clubbing provisions that I have not taught to you? Or something else in your mind that you have learned already? There is no condition of Mrs. A not having any income or having any income. No, I'm saying income, the house itself is transferred, not just income. Had the house itself been transferred, what would have happened? No, not because of Section 60, because I'm talking about transfer of the house. So Section 60 doesn't cover that situation. So you have read about Section 27. Yes, without consideration, without adequate consideration. That's right. Yes. So Section 27 is a section you must have studied in income from house property chapter. Okay. Which says that if you transfer a house property to your spouse without adequate consideration, you will be deemed to be the owner. So Mr. A, if he's the owner, then he has to pay income from house property. He has to pay tax on income from house property. If it is in connection with agreement to live apart, divorce, that's a separate thing. But in a normal situation, the deemed ownership condition should apply. Right? So I was talking about Section 27. If you recall, and if you have already studied, deemed ownership section in income from house property chapter. Okay, just take a note of it. If you have not studied, whenever you study, you will be able to correlate. Just write it down separately that you need to check Section 27 also. Okay. Acha. Here we are talking about not the transfer of house property, but the transfer of right to the income from house property. So A is giving the right to receive rent in respect of the house property to his wife without transferring the house. So house is of A, rent is of Mrs. A. Now you tell me who will pay tax on this rent? Mr. A. And that is by virtue of Section 60. Is it okay? Is everybody is understanding? This is a very simple section. Yeah. Okay. Next, we come to the next section, income from revocable transfer of assets. Okay. Is my chat visible? So everybody's chat is visible, but I would not like to see all the chats now. Please try to put it in BOS portal unless I ask you to put it in the chat box. Okay. Okay. Thank you. So income from revocable transfer of assets. All income arising to any person by virtue of a revocable transfer of asset. Okay, revocable. What does revocable mean? This is very important. This is the most important word in this line. Because if it is irrevocable, then clubbing provision will not attract. Revocable means cancelable, you can revoke it, able to cancel it, to take back. Yes, that means you don't want to, really give your asset, but you are just doing an agreement that, okay, through some interplay of conditions, you will be able to get it back. That means somewhere or the other, you continue to have a right or power to reassume it. Okay. And therefore, you have not wholeheartedly given it. That means somewhere or the other, it is an arrangement you have made only to pass the tax, only to divide the income. That, okay, 2 years, I am having a lot of income. I have huge capital gains, lot of income, lot of other income also. I don't want income from this asset. 2 years, please, my wife, you take care of it. You pay tax. You have a lower slab, perhaps. Okay, you pay tax. After 2 years, I will take this asset back. I will not have too much of capital gain and other income at that point of time, and then I will continue to pay tax on this. So, in an arrangement where you reserve the right to take the asset back, means you have not wholeheartedly given it in the first place. That means somewhere the lawmakers think that this is a tax avoidance mechanism. You are just trying to park your taxes somewhere for a brief period of time. In the long term, you are the owner of the asset. You will continue to be the owner. You will take it back eventually. We understand. Okay. When you see clubbing provisions, don't try to, as I said earlier, don't try to think what should be ethical, what should not be, what if the person does not intend to take it back and all that. Don't think like that. These are just written in the law. They are deeming provisions. Okay, when deeming provisions, you don't apply your mind, your heart. You just apply what is written in the law, and you accordingly see. Okay. So what is revocable? As the name suggests, revocable is cancelable. Power to take it back. You can just write it for somebody who asks what is revocable. Broadly, it means cancelable. And transfer is deemed to be revocable if it provides way for retransfer or right to reassume power directly or indirectly, whole or part of income or assets. Okay. Yes, Nitin. Everybody's chat is visible. Once the transfer is revocable, even for part application, okay, Nitin, if you want to write, and not only for Nitin, it's for everybody. Please do not use the chat box for some time. Please try to put it in the BOS portal. Whatever you want to say. Okay. From time to time, I will go and check that. And your queries, most of them may subsequently get answered in the course of the discussion. So please also have some patience. Okay. All right. Once the transfer is revocable, then even for part application of income, the entire income will be included. That means if the arrangement is revocable, even if for part of the income or the asset, then the entire income which is arising in the hands of the transferee will be clubbed in the hands of the transferor. Okay. But this generic rule does not apply in certain situations, which is an exception. Please mark the exception. Please highlight. Okay. Exception above will not apply, which means there will be no clubbing. Exception means no clubbing situation. No clubbing. So no clubbing in which situation? A transfer by way of trust or otherwise, which is not revocable during the lifetime of the beneficiary or transferee, provided the transferor derives no direct or indirect benefit from such incomes. Which means that if the transferor is transferring the asset to a trust, and that is revocable only after death. Revocable. Yes, it is revocable. If it were not revocable, वो ऊपर ही नहीं आता तो नीचे से क्यों निकालते? It is revocable, but it is revocable on the death of the transferee or the beneficiary of the trust, whatever as the case may be. So you are transferring to directly to person or through trust, and which is revocable only on a contingent event, which is the death of the transferee or beneficiary. Then this cannot be a lawmakers think this cannot be a tax planning mechanism, a tax avoidance mechanism. So let us allow this. There should not be any clubbing in this situation. So if something is not revocable till the death of the transferee, or in other words, it is revocable only on death of the transferee, then it will not be treated as revocable for this purpose. It will be treated as irrevocable, which means there will not be any clubbing. Okay. Revocable only on the death of the transferee is equal to irrevocable for this purpose. Can you write that? You can write that somewhere. Revocable only on death of transferee is equal to irrevocable, which means no clubbing. Okay. Example. If you read this example, you may understand it a little better. Mr. Rajesh transfers his house property to a trust for the benefit of Mr. Ramesh. till his death. So Rajesh has given the house to a trust, said beneficiary is going to be Ramesh. Till he dies, he will have this. When he dies, I will have it back. Okay. If you are giving something which is so contingent as the death of the other person, okay, then certainly there is no planning element involved here, because death is not in control of anybody. So the lawmakers think that this is almost when they are deeming everything, then they have might as well deem this situation as irrevocable. Okay, simply to put that. And till the death of Mr. Ramesh, so at least till the death of Mr. Ramesh, whatever income arises to the trust from the asset will not be clubbed in the hands of Mr. Rajesh. It will remain with the trust. Okay. But once Mr. Ramesh dies and the transfer now becomes revocable, the asset comes back. Okay. Once Mr. Ramesh dies, the asset comes back. Then income from the asset will again start getting taxed in the hands of Mr. Rajesh. Okay. Is it all very clear? Please give me a thumbs up. What is revocable? What is irrevocable? Normally, income from revocable is taxable. In which situation revocable will be treated as irrevocable? And what happens on the death of the other person? When the asset comes back, the income should also come back. Yes, exactly. All right, very good. Next, we move to the next. All right, this is very interesting, like all of you said, okay, because so far we were talking about any person to any person, we didn't really have in mind family. So far, did I tell you Rajesh and Ramesh are family? It didn't matter, okay? The earlier sections didn't care about family relation. But now we are going to talk about certain specific family relations which are deemed in the eyes of law as such close family relations that you can influence or you can effectively control the income in the other person's hands. So you may use it as a route to avoid taxes. Okay. So whether or not it is actually true, ma'am, it doesn't happen like that anymore. You do not have any control on your spouse's income or assets. I understand, but maybe this was not the situation when the law was made, or maybe this does not matter. They are thinking that this kind of a relationship is such that you have effective control over one another, and therefore you need to, this can be used as a tax avoidance mechanism. Okay. All right. So let's see what is the situation. There is one kind of situation of remuneration. So there is one company, X Private Limited, okay, in which Mr. X has a substantial interest. What is substantial interest? What is substantial interest? If X Private Limited is a company, which yes, in this case it is, then Mr. X has 20% equity shares or voting power. Yes, yes. You must have read this phrase at other places also in the law, and it is consistently worded. Yes, yes. So if it is a private limited company, if it is a company, then we talk in terms of equity shares which carry voting rights. If it is anything else, then we talk about profit sharing ratio. Okay, basically entitlement to profit. Okay, if you have more than 20% entitlement to profit by way of equity shareholding, by way of profit sharing ratio, whatever it is, then effectively you are interested in that company. It is somewhere, there is a related party stuff. You are not unrelated. Somewhere you can use, wherever there is a related party question, then law starts to think it in a, with a different lens, with a very suspicious lens, that something is cooking here. So related party hote, it attracts a lot of attention. And in this case, X and X Private Limited are related parties because you have substantial interest in that company. Okay. So what will you do with this related party relationship? What you will do is you will ask X Private Limited, which is almost in your control, or you are substantially interested in there. So you may have a say in what the X Private Limited decides to do. You will ask them, please you appoint my wife also and start paying some salary. Okay, so that some income from X Private, because otherwise what would have happened? If I want some income out of X Private Limited, I hold 20% shares in X Private Limited. Okay, how do I get money? Either I have to draw salary from that company, or I will ask them, by pay dividend to me. How will I take back my money? I have put in capital, but how do I take back my money? You give me dividend, or you give me salary, you give me something so that I get my money back. I get return on my money. Okay. So, and if I get, then everything is taxable now. Even dividend is taxable in my hands. And suppose I'm in the highest slab rate and I don't want to pay more taxes. So I would say, you don't give me anything. You appoint my wife and you give it to her. You pay salary to her. And she does not have any qualification as such which you would require to appoint. It is just that I can influence your decision. So because I am telling you, you go and appoint her. Okay. Now, if this is the situation, right? If this is the situation, then this is what the lawmakers were fearing, that this should not happen. Okay. So if X single or along with his relatives, X alone or with his relatives holds 20% profit sharing in a concern, and X's spouse enjoys remuneration from that concern without having any professional qualification, then this is a case of clubbing. X has made this whole arrangement to avoid taxes, and remuneration of Mrs. X should be clubbed with X. Okay. Now, when I say X alone or X with relatives, then who is relative? Who is relative? We have such a beautiful income tax law where the term relative is defined in different ways, in different contexts. Who is related to you, who is not related to you, is such a subjective matter, not only in real life, but also in the eyes of income tax. Because they redefine it as per the situation. In this situation, the definition of relative is spouse, sibling. They had also, okay, sibling, by sibling, I mean brother, sister. Spouse is husband or wife, as the case may be. Okay. Lineal ascendant covers parents, grandparents, great grandparents. Okay, so I'm not talking about mother, father separately. They are covered within lineal ascendants. And lineal descendants, which are your children, grandchildren, great grandchildren. Okay, so your family is actually a very close knit family, which they have talked about here. If you see the definition of relative in 56-10, हाँ, जहाँ गिफ्ट मिलता है लोगों से, गिफ्ट आपको किसी से भी मिल सकता है, वो रिलेटिव की डेफिनेशन बहुत बड़ी है, क्योंकि गिफ्ट देने में इतना कुछ नहीं है, वो बहुत बड़ी डेफिनेशन है, बुआ, फूफा, ताऊ, everybody is covered over there. Okay, but in all situations, when you think about relative, not all of them are relatives, or maybe they are not close relatives, they are extended relatives. Here we wanted to cover close relatives, and therefore we have included your spouse, mother, brother, sister, sibling, lineal ascendant, which includes parents, grandparents, great grandparents, lineal descendant, which includes children, grandchildren, great grandchildren. All of this together are considered to be your relative. So if you alone or with your relative together, you are owning more than 20% in any company, and that company is giving salary not to any other relation, but only your spouse, without any professional qualification, then that salary is going to be clubbed in the hands of the person who has this interest, which means the husband. Okay. Now see an example. Mr. A holds shares carrying 25% voting power in X Private Limited. 25% is more than 20. So there is substantial interest. Okay. Okay. Mrs. X is working as a computer software programmer in X Private Limited. Oh, okay. We were saying that the spouse should not be having professional qualification. So you can see that her appointment is a favor or a tax avoidance stint. But here she is a computer programmer and she is very much doing her job. She would have done for anybody. She would have done for Y Private Limited also, the same thing. She's just doing for X Private Limited, and it's an incidence that Mr. A holds shares in X Private Limited. He may have facilitated her employment, CV pass kiya hoga, refer kiya hoga, but she's doing her work as by applying her professional qualification. So this case, if she is professionally qualified enough for the job and she is earning something, then she should only pay tax on this. This is not fair that Mr. X would pay tax on this. This is not a situation of clubbing. So 30,000 per month to bhai, Mrs. A only has to pay. She is qualified, she is earning, she should pay tax. Okay. She is, however, not qualified for the job. Oh, we were thinking something, and now came a twist in the story. She is not qualified for the job. Acha, so she is qualified, but the kind of, maybe she is appointed as an accountant in this job. Maybe they don't need computer software programmers. Maybe it is not a software company. Okay, so she has been hired as an accountant, but she is a computer programmer. Do you think this is good? Do you think this is fair? This shows that perhaps her appointment is only because of Mr. A's control over that company through 25% shareholding or through substantial interest. In this situation, if her salary is 30,000 per month into 12 means 3,60,000 rupees per annum, and then you give her standard deduction 50,000 or 75,000 as the case may be, depending on whatever regime she falls in. Okay, then we'll have to do something about her salary. We'll have to club it with Mr. A. Okay. And the other income of Mr. A and Mrs. A are 7 lakh and 4 lakh respectively. So fine, if we have to calculate the income, if we say Mr. A and this is going to be Mrs. A. So other income is for Mr. A it is 7, for Mrs. A it is 4. And then there is another income of salary of Mrs. A, but she will not pay tax on that. Mr. A will do 3.6 lakhs of salary minus standard deduction. Standard deduction in this case is they are under default regime. Default regime means standard deduction has been enhanced to 75,000. Hope you all are all aware of this. This is a new development. Default regime standard deduction is 75,000. Okay. So we will give her 75,000. If somebody can calculate and tell me what should be Mr. A and Mrs. A's income. What should be Mrs. A's income? Mrs. A. 9.85 Mr. A. 4 lakh Mrs. A. Okay. Okay. So everybody is understood. Okay. She is qualified, but if not qualified for the job, then it does not matter to us, as if not qualified at all. And therefore, we will do the clubbing. Okay. All right. Now, let's take a situation here. Because I said that the individual alone or the individual with his relative together can be substantially interested in a company, right? So if we take a situation that have I given drawing rights to everybody? Please do not hover your cursor. Please do not. Please refrain from that. Otherwise, I'll have to fix this drawing. Okay. So, so suppose X and Mrs. X together, X holds 15%, Mrs. X holds 10% in X Private Limited. Okay. Now, each, if you see alone, if you see individually, are they holding substantial interest in the company? No. But if you see together, because Mrs. X's relative as per the definition, and X is Mrs. X's relative as per the definition, and together they are holding 25%, which is more than 20%. So they are substantially interested. Both of them are substantially interested. Okay. Let me assume both of them are not qualified for the job in X Private Limited. They are not professionally qualified. X is earning 10 lakhs. Mrs. X is earning 15 lakhs. Okay, and they are not, both of them are not qualified for the job. This is the salary. Other income of Mr. X is 25 lakhs and Mrs. X is 7 lakhs. Other income means other than the salary. Their other income excluding the salary is computed income after applying all the provisions of various heads. Their computed income, GTI is 25 lakhs for X, 7 lakhs for Mrs. X. Okay. Now you tell me, what should we do? Both of them are together substantially interested in a company in which both of them are not qualified. To take a job in which for which both of them are not qualified. So whether we club 10 lakhs of X's salary with Mrs. X and 15 lakhs of Mrs. X's salary with X, what should we do? What should we do? Mrs. X should be clubbed with Mr. X. Mrs. X should be clubbed with Mr. X. Somebody is saying, भाई 7 lakhs आप इधर ले जाइए. अच्छा, और ये इनका क्या करें? इनके 10 लाख का क्या करें? 7 lakhs नहीं, sorry, 15 lakhs. 15 lakhs of salary. Yes. Yes. Sure. Sure. Mm-hmm. Mm-hmm. Yes. Okay. आप लोग तब तक सोचिए, बाकी लोग, कि somebody told me Mrs. X का salary please club with X. What to do with Mr. X's salary now? It will be taxed in his hand only. Okay. So how did you decide? You like Mrs. X more or you like Mr. X more? What made you decide that one person's income should be clubbed but the other person should pay tax on his own income? What made you decide who should do what? Which is high. Okay, I think somebody has already read the chapter. Good. So you will see the income total GTI other than this income is high in whose hands? Okay, in this case, it is high in whose hands? It is high in X's hands. Okay, so who has more chances of trying to evade tax? Trying to avoid tax? This person who is sitting with 25 lakhs of income, and if he gets salary income of another 10 lakhs, okay, and salary income of 15 lakhs of Mrs. X, this person is perhaps going to go into the 30% bracket, and he's saying, Baba, no, this is not fair. So Mrs. X should let us give some salary to Mrs. X. So basically, the person whose other income, or whose, by other income I don't mean income from other sources, I mean the total income other than this particular income. Okay, whoever's is higher, the entire income will be clubbed in his hands. So Mr. X will pay tax on his 25, he should have paid. On his 10, he should have paid. But also on 15 of Mrs. X. And Mrs. X is going to pay tax only on 7. Okay? Mr. X is going to pay tax on 50. Mrs. X is going to pay tax on 7. Is it clear? Okay. Chalo. All right. We go back to our thing. Okay. Now we will talk about another situation about spouse, as far as spouse is concerned. What we discussed so far was about remuneration. Now we are going to discuss about another situation dealing with spouse. Okay. So qualification thing we have already discussed. Okay, now let us see both of them having substantial interest we have already discussed. So this and this we have already discussed. Okay. Now we'll talk about transfer of assets for the benefit of spouse. Transfer of assets for the benefit of spouse. Directly or indirectly. If directly you transfer the asset itself to the spouse, or you transfer the income without transferring the asset itself to the spouse, then anyway, I mean, we have already dealt with sections which will govern the taxability of income, clubbing of income. Okay, we have talked about section 60, we have talked about section 61. So if you are going to directly do something, we are already covered by them. But if you want to indirectly do something, then also we are covered, is what this section wants to say. That when it comes to spouse, direct or indirect, no matter what you try to do, if it is for the benefit of spouse, you may be transferring the asset to her, or you may be transferring the asset to somebody for her benefit. If the beneficiary is the spouse, then the income from will be clubbed in the hands of the transferor. Okay, and the fact that you have given the asset at a discount to somebody, if you had given it directly to the spouse, you have given the asset free of cost or for an adequate consideration to the spouse, then normally 56 to 10 would have also got attracted. I don't know if you have studied income from other sources, but you will eventually, and you will see that there is a section which says that if you are receiving an asset without inadequate consideration, either free of cost or for inadequate consideration, that means it is discounted or completely a gift to you. All right, and unless it satisfies certain exceptions, like it is coming from a relative or it is coming on a specific occasion which is mentioned in the law, then it is taxable, okay, in the hands of the person who's getting this gift. So law says आपने उसका पैसा भले ही नहीं दिया हो, but tax जरूर देंगे इसके ऊपर. Okay, if you have got a gift, you pay tax on the gift. All right, so but there are some exceptions, like if a relative gets the gift, if you get gift from a relative, then you don't pay tax. And spouse is very much a relative even for that definition. So if Mr. X had given the asset at a discount directly to Mrs. X, then there would not be any chances of taxability of gift in the hands of Mrs. X because of 56 to 10 exceptions. But if you transfer the asset to a person or AOP or a trust or somebody in between for the benefit of Mrs. X, okay, immediate or deferred benefit can be now or later. But if you have transferred to a person, you have made a conduit in such a way that I am transferring to this person which people can see, but this person is going to use the income from the asset for the benefit of my spouse either now or later. Then when this person gets the asset from Mr. X, we need to examine 56 to 10 in the hands of the transferee, that he has got a gift and Mr. X may not be a relative. So you see the conditions, whether it is more than 50,000 rupees, whatever it is, and then you tax in the hands of the transferee. That is the value of the gift itself. And what about the income arising from the gift? That will be clubbed with Mr. X. Okay. Is it okay? Mr. X has given an asset. Mr. X has given an asset at a discount to a person. Okay. This person will pay tax on the gift subject to provisions of 56 to 10. But this person will use the asset for the benefit, immediate or deferred, of Mrs. X. So whatever income is arising from the asset which has been transferred by Mr. X will be clubbed back in the hands of Mr. X. If SDV more than 50,000, then yes. Why are you only concerned about immovable property? It can be anything else. It can be a laptop. So let's not talk so specific. SDV and all that applies only to immovable property. But our question is, it can be anything. It need not be immovable property. And of course, whatever you have read elsewhere, stamp duty value, fair market value, 56 to 10, 50 CA, those things, a lot of other sections. So of course, those things will apply. You will apply those provisions, but you need to see if they are not falling in the exceptions to that section. That is when we talk about the transferee. But the point of this discussion today is that no matter what happens in the hands of transferee, you definitely check those sections, but the income from that asset will get clubbed back in the hands of the transferor. Okay. So whenever you get a question, you may be asked two things. Please analyze tax implications in the hands of the transferor, in the hands of the transferee, in the hands of the beneficiary. Beneficiary is Mrs. X here. Okay, you need to see from each of their perspectives and apply all the provisions that you know. Is it okay? Okay. Okay. So let's see if income is now when income asset has been transferred without adequate consideration, then what happens? Okay. So suppose let us first talk about asset other than house property. Okay. If asset other than house property is transferred to spouse otherwise than in connection with an agreement to live apart, otherwise than in connection with an agreement to live apart, what do you call it? That means, okay, please do not confuse this with a divorce. It may not be a divorce as such. It's a situation where they are living apart or where they have agreed to live apart. Okay, but if that is not the situation, it's a very happy family staying together, and Mr. X has, or Mrs. X, why only Mr. X will transfer all the time? Mrs. X is transferring her house to Mr. X. Okay. Sorry, other than house we are talking about now. So say laptop. Mrs. X is transferring laptop to Mr. X. And Mrs. and Mr. and Mrs. X are living very happily together. They have no connection, they have no intention to live apart. There is no agreement to live apart. Okay. And Mrs. X has given her laptop to Mr. X. Suppose Mr. X uses the laptop to do a lot of things. He's earning income. He's using the laptop for share trading and earning a lot of income from share trading. Who will pay tax on that income from shares? So it is the transferor. Transferor, income arising to personal asset. See, we are not talking about capital gains chapter here, no? We are not talking about capital gains that you need to see whether transfer is transfer for the purpose of capital gains or not, and if it's a personal asset or personal movable effect or this and that. Okay. You suppose okay, just ignore laptop for don't get distracted. I'm just changing this laptop example to car, if it's okay. Mrs. X has given her car to Mr. X. Mr. X uses the car to run a carpool. Okay. And earns a lot of income by flying school children to and from school. Okay. So what we are trying to say is the personal movable effect, this and that, you should see, but that is from the perspective of capital gains, whether it is a capital asset, whether it is a transfer. But here we are talking about any asset. Okay. And we not about taxable transfers, because you are not here seeing what is happening in the hands of the transferor from capital gains perspective. You are here focusing on what is happening on the income from the transferred asset and who will pay tax on that. So income of the transferred asset will go and get clubbed again along with the transferor. Okay. Now let us see what happens in case of house property. I had spoken about it a little briefly earlier, that if husband or wife transfers the house without adequate consideration to the other spouse, husband gives to wife, wife gives to husband, okay, and not in connection with agreement to live apart, they live very happily together. Okay. Then the transferor will be deemed owner of the house property under section 27. So he will pay tax on income from house property in his own hands under section 27 and not under section 64. Okay. In case of spouse, this clubbing is happening under section 27 and not under section 64. If anybody can tell me what difference does it make, सेक्शन में क्या रखा है, अगर देना इन्हीं को है, मिस्टर एक्स को ही देना है, मिस्टर एक्स अगर ट्रांसफरर है उन्हीं को टैक्स देना है, इसमें भी देना है उसमें भी देना है, वेरी वेरी गुड. It makes a difference because अगर आप डीम डोनर हैं, इनकम फ्रॉम हाउस प्रॉपर्टी के चैप्टर में आपको एक स्टैंडर्ड डिडक्शन मिलता है 30%, 24B, 24A, यस। हाँ, और अगर आपका बस क्लबिंग हो रहा होता तो बस इनकम आ जाता, आपको और कोई डिडक्शंस नहीं मिलते। सो ये बहुत मैटर करता है। इट्स अ ट्रिक क्वेश्चन, ओके, विच इज गिवन। आपको बोला जाएगा हाउस प्रॉपर्टी ट्रांसफर हो रहा है, एक तो स्पाउस को हो रहा है, फिर एक सन की वाइफ को हो रहा है, फिर आप बोलेंगे क्लबिंग तो दोनों में ही होना चाहिए, पर स्पाउस के केस में सेक्शन 27 है, सन वाइफ के केस में वैसा कोई डीम्ड ओनरशिप नहीं है। ओके, सो दैट इज अ डिफरेंस। तो उसमें सेक्शन 64 होगा। ओके, इनकम फ्रॉम accretion of the transferred asset not club. This is also very important. Who understood this? Income from accretion of the transferred asset. Okay, income from accretion of the transferred asset means suppose Mr. X ने Mrs. X को FD दे दिया, राइट, FD दे दिया, बैंक ट्रांसफर का FD ट्रांसफर कर दिया, Mr. X transferred his FD to Mrs. X. Mrs. X is earning income interest on the FD. Interest on FD is interest on the asset transferred and will be clubbed back with Mr. X. But interest on interest is interest on accretion of the transferred asset. That is not going to be clubbed. That will remain taxable in the hands of the transferee. Who understood this? Who understood? Yes. So FD has been transferred. Interest on FD will be clubbed in the hands of Mr. X. But interest on interest will not be clubbed in the hands of Mr. X. It will continue to be taxed in the hands of the transferee, which is Mrs. X. Okay, if you want to see a diagram, if you think that helps you understand. X has given FD to Mrs. X of 50,000, interest income of 10%, and Mrs. X has further invested the money in another FD, interest income of another 10%. So Mrs. X is earning 10% of 50K, which is 5,000, which will get clubbed with Mr. X. She is also earning 10% of 5,000 because she has invested the interest also. She has reinvested the interest, which is 500, which will not be clubbed. Understood? So Mr. X is paying tax on 5K. Mrs. X is paying tax on 500. All right. Chalo. Okay. Let's go back. I hope this was understood. So for 500, Mrs. X will be liable. Yes, Pallavi, you're right. Okay. Okay, next, transferred asset invested in business. If the transferred asset has been invested in business means the asset has been transferred to spouse and that is invested by the transferee in the business. So X has given 5 lakh rupees to Mrs. X. Mrs. X has further put it in her business. So it has gone as capital coming from husband. Okay. Then whatever income she gets from her business, she may have put her own capital and then there is a supplement capital from her husband. Now, whatever profit she makes on this from her business, she should split in the capital ratio. And to the extent it is coming from the capital contributed by the husband, that profit should go and get taxed in the hands of the husband. Okay, that is the funda. But how do you calculate it is the mechanism which they have given here. that you need to see investment as on the first day of the previous year. It is very, very important to see investment as on the first day of the previous year. Suppose your previous year starts on 1st April 2024. Okay. And your husband gave you the money on 10th April 2024. Then at least for this year, financial year 24-25, what he has contributed will not come in the picture, which means it will be as if you are doing business. You are doing business with your own money. That means you are doing business with the, in the eyes of law, you are doing business with the money you have put on first day of the previous year. If there was no husband's money as on first day of the previous year, then whatever income you earn in this year, even if in the middle of the year he had put his money and something is contributable to him also, but for in the eyes of law, because they had to devise a calculation mechanism, they said if on the first day of the previous year there is no contribution from the husband, then no need to club profits for that year with the husband. We will see it in the next year, when as on 1st April of that year there will be some money of his put here. Okay, so if on 10th April he gave you some money and you put it in your business, then you don't need, then all the profits from the business will be clubbed in your hands and will not be shared with him, because his money was not with you on 1st April of the previous year. Is it understood? Money as on 1st April of the previous year is to be considered. For your case, 1st April 24, you need to check capital balances as on this date. Not understand. Very good. I really like that you didn't understand, because now I can explain with the help of example. Okay, so let us understand with the help of example. Okay. Maybe with this example, you will be able to understand. So just, bear with me. Mr. Vaibhav started a business on 1st April 23 with 5 lakh money, 5 lakh rupees. Okay. He incurred a loss of 2 lakhs during 23-24. And to overcome financial position, wife, Mrs. Vaishali, software engineer. They have mentioned software engineer, but this doesn't matter here. We are not talking about remuneration and qualification for the job. You are giving capital, you may not be qualified. It's okay. Here, qualification doesn't matter. Okay. So this piece of information of software engineer is not relevant to you at all. Okay. Gave a gift of 5 lakhs on 1st April 24, which was immediately invested in the business by Vaibhav. Immediately invested, then very good, because as on close of the day, as on close of 1st April 24, when you are shutting the, putting the shutter down, ki aaj ka kaam hua, as on that date, by that date, you had got money. तो 1st April को आपके हस्बैंड का, आपकी वाइफ का मनी आ गया है आपके पास, तो इसको भी कंसिडर करना पड़ेगा हम लोग. Okay, which was immediately invested in the business, and he earned a profit of 4 lakh during 24-25. Compute the clubbing in the hands of Vaishali for 25-26 assessment year. Okay. And what happens if it was a loan? That we'll do separately. Let's first think about gift. Okay. Gift mein kya hota hai? Let's first think that. So you need to, as I told you, for you, the previous year is 24-25. You need to check the capital balance as on 1st April 24. Okay, for your term, you need to check capital balance as on 1st April 24. So if you have got a huge list of transactions, 22 mein ye hua, 23 mein ye hua, you please understand all of those are hints so that you can calculate the capital as on 1st April 24. You need all of that only for doing this, because income तो आपको इसी साल का देखना है, पहले के इनकम से आपको कुछ नहीं करना है, पहले के लॉस से आपको कुछ नहीं करना है. ओके, आपको अभी का इनकम क्लब करना है. सो आपको 1st April 24 के कैपिटल को कंप्यूट करने के लिए ये एडिशनल इंफॉर्मेशन दिया हुआ है. ओके, हाउ? So we will see that you started on 1st April 23 with 5 lakhs. Then you incurred a loss of 2 lakhs. So during 23-24. तो 1st April 24 को आपका अपना पैसा है 3 लाख. Is it okay? In these kind of sums, generally they give a very simple way of calculating capital. Okay, because their focus is to ask you something else. So capital बहुत ही इतना आराम से निकल जाएगा. 5 minus 2 equal to 3. ठीक है? So 3 lakhs is your own capital as on 1st April 24. Own capital. And कैपिटल आउट ऑफ वैशालीज गिफ्ट इज अनदर 5 लाख, क्योंकि उसने 1 अप्रैल को ही दे दिया. अगर उसने 2 अप्रैल को दिया होता तो आंसर वुड हैव चेंज्ड. उसने 1 अप्रैल को दिया और आपने 1 अप्रैल को ही यूज कर लिया, देयरफॉर द आंसर लुक्स लाइक दिस. एम आई क्लियर इन दैट रिस्पेक्ट? Because our entire focus is on what happens on 1st April 24. What is the ratio of own capital versus spouse's capital? I mean, contribution from spouse in your capital. Is it okay? So as on 1st April, your own capital is 3, contribution from spouse is 5, total is 8. During this year, you earned a profit of 4. 4 we need to divide between you and your spouse's capital contribution. That means in 3:5 ratio. 3:5 ka ratio mein when we divide 4 lakhs, then we get 1.5 lakhs and 2.5 lakhs respectively, which means 1.5 lakhs is on your own capital. It will be remaining continue to be taxable in your hands, but 2.5 lakhs has come from your wife's capital, so it will go and get clubbed with Vaishali. It will go and get clubbed with your wife. Is it okay? 2.5 lakhs ka clubbing hai is sum mein. Is it understood now? No answer. Ma'am, if on 2nd April spouse gave gift, then what will happen? Very good. If 2nd April ko spouse had given gift, then when we were calculating capital as on 1st April, तो ये वाला जो कॉलम होता 5 lakhs वाला वो जीरो होता. Are you with me on this? As on 1st April आपका टोटल कैपिटल 3 लाख था. और वाइफ का कंट्रीब्यूशन 0 था. तो फिर ये सारा मतलब 0 के रेशियो में अब क्या एलोकेट होगा? 0 तो 0 ही है, इसीलिए सारा का सारा प्रॉफिट 4 लाख आप ही के पास आता. No clubbing in that case. So somebody didn't understand the whole thing. Park that person. I am going to do the whole thing once. But somebody understood partly and asked me what happens if this was contributed on 2nd April. Has that person understood? Okay, good. Now let me do it again. Okay, let me do it again. इसके ऊपर ना हमारे पास एक illustrations में भी सम है, but ठीक है. देखो, what is happening? Mr. Vaibhav is doing a business. Okay, he has his capital, he did some loss, he may have done some profit, and he has a capital balance on 1st April 2024. Okay, his wife, ये सब जो सारा background है ना, oh, he had a loss to overcome financial position, wife had to come in. This is a story building. This is not relevant to you. He's doing good. He still has 3 lakhs of his own money. Okay. And even if he had a profit, you could not have stopped the wife to give more capital, right? So these things are only dramatic. इनको आप छोड़ो. तो 3 लाख उनका कैपिटल है 1st April 2024 को. लॉस को भी सेट ऑफ कर दो तो ठीक है. मतलब लॉस सेट ऑफ क्या करो, लॉस ने कैपिटल को इरोड कर दिया और 2 से कम होके 3 हो गया है. 1st April को उनका खुद का कैपिटल इतना है. Wife has gifted another 5 lakhs and this person invested 5 lakhs on 1st April 24 itself. So as on when we check capital as on 1st April 24, we found 8 lakhs. 8 lakhs with 3 lakhs coming from husband, 5 lakhs coming as gift from wife. Then during this year 24-25, the husband's business earned a profit of 4 lakhs. Now we are supposed to divide that in the ratio of capital contribution, 3 coming from husband, 5 coming from wife. So 3:5 में जब हम 4 लाख को बांटते हैं तो हमको मिलता है 1.5 लाख और 2.5 लाख. 1.5 लाख आपके खुद के कैपिटल पे है तो ये आप ही का है, आप ही को टैक्स देना भी चाहिए, कोई प्रॉब्लम नहीं है. बट 2.5 लाख आपकी वाइफ से गिफ्ट आया था तो इसके ऊपर जो इनकम है 2.5 लाख वो वाइफ को ही टैक्स देना चाहिए. इट विल बी क्लब्ड विथ वाइफ. डिड यू अंडरस्टैंड नाउ? ये वाला सिचुएशन somebody understood? Yes, okay. अब second situation somebody asked me, मैम वैशाली ने 1st April को ही दे दिया, अगर 2nd April को दिया होता तो क्या होता? तब 1st April का जब हम कैलकुलेशन कर रहे थे कैपिटल एज ऑन 1st April, so we would have seen वैभव का कंट्रीब्यूशन तो 3 ही है, nothing to change, right? बट वैशाली का कंट्रीब्यूशन 0 है. 1st April को तो 0 है, isn't it? 0 तो है. 1 अप्रैल को 0 है, which means 1 अप्रैल को total capital 3 lakhs ही है and the entire capital is coming from Vaibhav, which means 100% capital is of Vaibhav. That means 100% profit will also be of Vaibhav and nothing will go to Vaishali, which means 4 lakhs उस situation में 4 lakhs would have remained with Vaibhav with no clubbing in the hands of Vaishali. Is this situation clear? Okay, very good. Question का second part था, if Mrs. Vaishali gave the said amount as loan, what would be the amount to be clubbed? अगर loan दिया होता तो क्या होता? Loan from wife, what would have happened? अगर आर्म्स लेंथ पे है, इंटरेस्ट ले रहे हैं, तब ठीक है, कोई प्रॉब्लम नहीं है. लॉ को तो इनएडिक्वेट कंसिडरेशन से प्रॉब्लम है. लॉ को स्पाउस से लिए हुए सारे ट्रांजैक्शन से प्रॉब्लम नहीं है. वो रिलेटेड पार्टीज के ट्रांजैक्शंस को बहुत क्लोजली देखते हैं क्योंकि उनको सस्पिशन है, बट सबसे प्रॉब्लम नहीं है. अगर बोनाफाइड ऑर्डिनरी कोर्स ऑफ बिजनेस विद प्रोफेशनल क्वालिफिकेशन, मतलब अगर वो सब ठीक है तब ठीक है. प्रोफेशनल क्वालिफिकेशन आई एम टॉकिंग अबाउट रेम्यूनरेशन. व्हेन यू आर पुटिंग कैपिटल, योर क्वालिफिकेशन डजंट मैटर. यहाँ पे नहीं रेलेवेंट है, ठीक है. सो अगर सब कुछ बोनाफाइड है, ऑर्डिनरी कोर्स ऑफ बिजनेस में है, एवरीथिंग इज ओके, यू आर अर्निंग इंटरेस्ट ऑन द लोन, देन ओके, देन नो क्लबिंग. बट इफ यू गिव अ गिफ्ट व्हिच मींस इनएडिक्वेट कंसिडरेशन, देन देयर इज अ प्रॉब्लम. ओके, नाउ समबडी सेड, मैम हस्बैंड वाइफ के बीच में तो नेचुरल लव एंड अफेक्शन होता है, तो वो भी तो कंसिडरेशन ही होता है ना, उसको कैलकुलेट नहीं कर सकते. लेकिन इंटेंजिबल कंसिडरेशन होता है. सुप्रीम कोर्ट ने भी बोला होता है, लेकिन सुप्रीम कोर्ट ने ये भी बोला कि एडिक्वेट नहीं होता है, inadequate होता है. So inadequate considerations are covered in clubbing. Okay, natural love and affection is not adequate consideration as per the Supreme Court. All right. Okay. अच्छा, 56 to 10 would not be attracted because उनको, क्योंकि जब उनको गिफ्ट मिला था ना अपनी वाइफ से, उनको 5 लाख का गिफ्ट मिला था अपनी वाइफ से, तो 56 to 10 should have got attracted, but because it's a wife relation, because she's a relative, तो वो exceptions में fall करेगा. इसलिए the receipt of gift per se is not taxable in the hands of the donee or Mr. Vaibhav in this case. ये बात ठीक है ना? 56 to 10 आपको हमेशा देखना है, क्योंकि अभी हम लोग हस्बैंड वाइफ बात कर रहे हैं, तो दे आर रिलेटिव्स ऑफ ईच अदर, तो वो प्रॉब्लम नहीं आती है. बट अदरवाइज यू नीड टू सी 56 to 10. ओके, क्योंकि ट्रांसफरी के हाथ में इनएडिक्वेट कंसिडरेशन से कुछ मिला, वो भी चीज टैक्सेबल है. फिर उससे कुछ इनकम आया, तब उसका क्लबिंग देखेंगे. ओके, तो आपको अगर ऐसा कुछ हो तो नोट दे देना चाहिए अबाउट 56 to 10 कि ये इसलिए नहीं लग रहा या ये इसलिए लगेगा. आपको एक नोट दे देना चाहिए टू कवर योरसेल्फ फ्रॉम एग्जाम पर्सपेक्टिव. ऑलराइट, चलो. मैम, इज देयर अ मिस्टेक इन द रेशियो 3:5 इन सॉल्विंग पार्ट इज 3:8? Solving part is 3:8. Ma'am, when we are doing ratio calculation, when we say 3:5, पर हम उसको जब फ्रैक्शन में कन्वर्ट करते हैं, हम तो 3/8 ही करेंगे ना. 3/3 + 5. आप समझे? किसने क्वेश्चन पूछा? 3:5 रेशियो है हमारा, पर आप जब इस रेशियो को अप्लाई करेंगे तो आप 3/3 + 5 करेंगे ना, 5/3 + 5 करेंगे ना. हाँ, ठीक है. ओके, नो प्रॉब्लम. सी, नो क्वेश्चन इज सिली. इफ यू हैव दीज डाउट्स प्लीज आस्क, क्योंकि आप जब खुद से सॉल्व करेंगे तब आपको ये सब प्रॉब्लम्स आएंगी. हाँ, यस भावना. I don't know if you have unmuting rights, so you can type in the chat box. 50,000 how to calculate? कौन सा 50,000? 56 to 10 वाला 50,000? तांबेश्वरी? Okay, you have not read 56 to 10. That's why you're saying it's a limit given in the section. It is not a calculation. Okay, आपको बस ये ध्यान रखना है. आप लोग पास में नोट कर लो. If you have not read section 27 from house property, or if you have not read 56 to 10 from income from other sources already, please park it as notes कि whenever we read the chapter we will understand. But what I'm trying to say is please evaluate section 27 and 56 to 10. Okay? अभी आपको नहीं समझ में आएगा, अभी आप लिख के छोड़ दो, जब आप सब कुछ पढ़ लेंगे आप फिर पढ़ेंगे तब आपको समझ में आएगा. Yes, Bhavna is raising her hand but is not able to write the question. मैम, वैशाली से गिफ्ट अगर 2 अप्रैल को भी देती है तब भी तो प्रॉफिट रेशियो में ही डिस्ट्रीब्यूट होना चाहिए. आप अकाउंटिंग करेंगे तो बिल्कुल होना चाहिए, ठीक है, अकाउंटिंग करेंगे तो प्रॉफिट बिल्कुल होना चाहिए. लेकिन हम जब डीमिंग प्रोविजंस देखते हैं, आई एम टेलिंग यू अगेन, प्लीज डू नॉट अप्लाई योर हार्ट कि भाई 1 अप्रैल और 2 अप्रैल में एक ही तो दिन का फर्क है ना मैम, हुआ तो वही है. It's not about your heart, it's not what the heart thinks. It's a deeming provision means you read it literally. जो लिखा है वही पढ़ना है. लिखा है देखो कैपिटल ऑन 1 अप्रैल और उसके रेशियो में बांटो. 1 अप्रैल के दिन भावना में वैशाली ने कुछ नहीं दिया तो उसका रेशियो 0 है, तो उसको कुछ नहीं क्लब होगा. ओके? डीमिंग प्रोविजंस हैव टू बी रेड लिटरली. डू नॉट अप्लाई योर हार्ट. एकदम मतलब नॉट जस्ट फॉर दिस, फॉर एनी डीमिंग प्रोविजन यू सी इन एनी लॉ. ओके, चलो ठीक है. ऑल राइट, चलो मैम, इफ इट वॉज गिवन बाय मिस्टर बी देन फ्रेंड. हाँ, आप देखो 56 to 10 आपको इवेल्युएट करना है. आप जितने केसेस बनाओगे उसमें आपको देखना है, किसी में लगेगा किसी में नहीं लगेगा, किसी में 50,000 से कम है इसलिए नहीं लगेगा, किसी में रिलेटिव से मिला है इसलिए नहीं लगेगा, किसी में विल, इनहेरिटेंस, डेथ, ये वो उन सिचुएशंस की वजह से नहीं मिलेगा. सो यू हैव टू चेक द एक्सेप्शंस टू 56 to 10 एंड यू अप्लाई ऑन केस टू केस बेसिस. Whether clubbing provision for first year profit also or for subsequent years profit also. Again 1 April 25 को हम लोग कैपिटल बैलेंस देखेंगे. जब तक उनका कैपिटल है तब तक उस कैपिटल से आते हुए प्रॉफिट्स भी आएंगे, बट कैपिटल से आया हुआ प्रॉफिट्स, कैपिटल के ऊपर के प्रॉफिट्स भी रीइन्वेस्ट होंगे, पर प्रॉफिट के ऊपर का प्रॉफिट क्लब नहीं होगा. ओके? All right, we are moving on. इनकम अराइजिंग टू सन्स वाइफ. सन्स वाइफ इज ऑल्सो अ रिश्ता जो लॉ की नजर में लगता है उनको कि आपका आपकी सन्स वाइफ पे बहुत कंट्रोल है. अगेन आप मुझे मत बोलना नहीं मैम ऐसे कहाँ होता है. हाँ, कहाँ ऐसा होता है कि हमें कोई टैक्स प्लानिंग करनी है तो सन्स वाइफ को घर ही दे दे. सो द पॉइंट इज अगेन इट्स अ डीमिंग प्रोविजन, और इन्होंने सिर्फ सन की वाइफ को ही कवर किया है, इन्होंने डॉटर के हस्बैंड को कवर नहीं किया है. ओके, okay, if you don't know his name, sorry. All right, so they are only covering son's wife and not daughter's husband, and income arising to son's wife from asset transferred without adequate consideration should also get clubbed. Okay, what we are trying to say is lawmakers have laid down certain relations specifically where they think that there is a need for clubbing, there is a tax avoidance mechanism going on. Okay, so they have listed that relationship. They think spouse is 1 point, they think son's wife is 1 point, they think minor child is 1 point. Okay, it cannot be that apart from these you do not have other relations where you may have control on the other person, and it may also not be that in these relations you may have control over the other person. However, lawmakers have thought this is a situation, and therefore we are talking about what they have thought. Okay, so in the previous example, if profit is retained in business, how will it be shared? Your sum will tell you the details that profit, or it will give you a ratio. You will have to calculate in the ratio that total profit which you have earned on the investment. If this much is capital, this much is profit, then how much are you earning from the profit and how much are you earning from the capital? You divide it by unilateral method. I mean, proportionately straight line method if you have no other details. Otherwise, some will give you details. Okay. All right. So let's not go back. Let's move forward now. And if you have any questions, you please put it in the BOS portal now. Okay. income arising to son's wife, like we were saying. So it is very similar to spouse. You will find that by you are reading this again. This is what we read for spouse. There are slight differences. So please mark those slight differences. Okay, because otherwise you just apply whatever you have learned for spouse, you apply to son's wife. And son's wife, you see from the perspective of the parent-in-law. Okay, Mr. X or Mrs. X giving to son's wife. Okay, so what is the difference with spouse? I would say you try to focus only on that, because rest of the things are similar. Okay, main difference. Spouse, if you remember, the transfer of asset was in two categories: other than house property, house property. Other than house property is by TK income from the transferred asset should be clubbed in the total income of the transferor. That is same in both the cases. But house property, in case of spouse, transferor was supposed to be the deemed owner under section 27, and taxable to income from house property, been able to claim standard deduction, etc. Okay, but in case of son's wife, that deemed ownership under section 27 does not apply, which means that this is a normal transfer. Even house property is treated at par with other assets when it comes to son's wife. So income from the transferred asset will fall under clubbing provisions of 64 only and no other provision. That means even if income from house property is getting clubbed in your hands, it is not a case of deemed ownership. Okay. All right. Transferred asset invested in business, absolutely same. Here, when our example, when we discussed Mr. Vaibhav and Mrs. Vaishali, if it was Mr. Amitabh and Mrs. Aishwarya, okay, it was the same, because these provisions are same. That when assets transferred to daughter-in-law are invested by the daughter-in-law in her business, proportionate income arising to the transferee from such investment is to be included in the total income of the transferor. And if it is in the nature of contribution of capital, proportionate interest receivable from the firm will be clubbed with the income of the transferor. That means it's the same as the example that we did earlier. The relationship will not be of wife, but will be of son's wife. Okay, where the transferee has to be the son's wife. Please be careful. Okay, husband wife may what happens is transferor and transferee are both spouse of each other, so it's easy. But in case of son's wife, it's not a mirror image of relationship. So son's wife has to be the transferee, and transferor will therefore now be parent-in-law. Okay. Transfer of assets for the benefit of son's wife, if not given directly, but if given to a trust or person to be used for the benefit of son's wife, then also income to be clubbed in the hands of the father-in-law or the parent-in-law, mother-in-law, whoever has given the gift. And the receipt of gift in the hands of this other person or trust has to be evaluated from the lens of 56 to 10. That you just write. Okay, 56 to 10 to be seen. Whenever you read this section in your course, then you will understand. Okay. All right. I hope this is clear. Okay, very similar to spouse. So I hope this is clear to everybody. If it is clear, then we move to the next relation, which is minor. Tell me if it is clear. So, ma'am, in case of son's wife case, income taxable in hands of transferee. Transferor. Income clubbed in hands of transferor. That's what we're trying to say. Transferee is to directly receiving the income. Transferee, being son's wife, is receiving the income, but it will be treated as income of the transferor or parent-in-law. That's what the chapter says. Chalo, okay. Clubbing of income arising to minor. We will, with this, more or less, we are at the, towards the end of the theoretical provisions, and a little more about this, and then we will start with illustrations. Okay, so that you also get to practice something you write and solve, and you will be a little more engaged in the class. All right, so if anybody is feeling sleepy because our class is after lunch, please drink a glass of water. Okay, without any break, please drink a glass of water and resume. Yes, somebody asked something. Loan case not clubbing. No, loan case in ordinary course not clubbing. Bona fide loan with interest, everything, no clubbing. Transferred capital from son and daughter, does it attract the section? Transferred capital from son and daughter. No, these sections that we are talking about are dealing with spouse or son's wife. Ma'am, if transfer to daughter husband, then 56 to 10 we will see because he is not relative as well. Daughter's husband should be relative for 56 to 10 purposes, you can check. But daughter's husband is not covered in clubbing provisions. So gift received by daughter's husband should be seen from 56 to 10 lens. Perhaps it is excluded. But income from the gift earned by the daughter's husband will not be clubbed with the parent-in-law. Okay. Ma'am, in both case, spouse and son's wife income taxable in hands of transferor. Yes. Yes, it is. Okay. So I hope nobody is sleepy, and if you were, you have drank a glass of water, and we will now move to minor. This is very interesting. Okay, that's very interesting. See what's happening here. Okay. All income of a minor, including married minor daughter. You will say, why am I writing this so specifically? Why, you will understand later. But here, please remember, including married minor daughter, to be included in the income of his or her parent. Okay. Which parent? You have two parents. Which parent? So income of a minor, including married minor daughter, to be included in the income of his or her parent. Quite understood. How will the minor file return, pay tax? So let his income be included with one of his parents. Which parent? That parent whose total income excluding minor's income is greater. Birth parent. So we're not talking about biologically. No. It's okay. Birth parent. By that, I think you mean biological parent, right? Let me tell you, when we talk about minor child, we also talk about, it also includes adopted child and stepchild. So biological parent is not necessary. Okay. Okay. So that parent whose total income excluding minor's income is greater, it will continue to be clubbed with that parent only in subsequent years. So once, okay, like suppose this is the first year of clubbing, first year minor has earned some income. So you have evaluated which of the parents has higher income other than minor's income, and then you include the minor's income in that with that parent. Next to next year, minor will continue to be minor for a long period of time, till the minor attains 18 years of age. Till then, what will you do? So every year, will you compare the two parents' income and then you see, today with Mr. X, tomorrow with Mrs. X? Will you do that? So the law says no. Because they know it's a continuing transaction, it's going to happen every year for a few years. So they say that it will continue to be clubbed once you have decided which parent to club with based on whose income is higher. In the subsequent years also, it will continue to be clubbed with that parent, even if his income falls lower than the other parent, unless the assessing officer feels that there is a need to club with somebody else and does that after giving that other person an opportunity of being heard. Okay. Okay. And what happens if marriage of parents doesn't subsist? If they don't live together, then the parent who is handling the child, who is taking care of the child, that parent is going to pay tax on the income of the minor. Okay. In the relevant previous year, whoever is maintaining the minor child, which can be different in different years, that parent is going to pay tax on income of the minor. So the normal situation is that all income of a minor, including married minor daughter, including stepchild, including adopted child, is to be clubbed in the hands of that parent whose total income other than income of the minor is higher. And once decided, every year you follow the same position, except if the assessing officer says that it should be clubbed in the hands of the other parent and gives the other parent an opportunity of being heard, that why should it be clubbed with him. Okay. If marriage doesn't subsist, then it should be clubbed with that parent who's maintaining the child in that year. All this clubbing provision apply only if principal income is not included in transferee. You mean to say that both people don't pay tax? If it is included with transferor, then it should not be included with transferee again. If you mean to say then right. Both two people can't pay tax on the same income. Okay, that cannot happen. Wherever clubbing provision applies and X's income is deemed to be Y's income, then only Y will pay tax on that income. X will not pay tax. Okay, is that okay? Acha. Now, in some cases, clubbing provisions are relaxed for minor. That is, in some cases, minor will pay tax on his own income. When? If he is suffering from any disability of nature specified in ATU, or if he is deriving income from a manual work or activity involving skill talent. Marriage minor child earn self when tax pay who? So, assuming married minor children are earning income, if it is married minor daughter, clubbing will continue to attract in the hands of the parent. But if it is married minor son, then no clubbing. Does that answer your question? Okay, so no clubbing for minor child suffering from disability, no clubbing from minor child doing manual work, no clubbing from minor child earning income from any skill, talent, or specialized knowledge. So if the child has gone to India's Got Talent, if the child has gone to KBC Junior, if the child has gone to any other, earning income by virtue of application of his skill, talent, or knowledge, or from his manual work, selling tea, he is selling anything else, okay, or if he is disabled under ATU as per a disease referred in ATU, then in these three situations there is no clubbing, which means the minor's income is taxable in his own hands. If a child is an actor, then no clubbing, right? Because we assume that it is through his application of skill talent. So child artists, no clubbing. Okay. Okay, exemption in respect of club income minor up to 1500 per child. So in case of old regime, ma'am, my married minor daughter clubbing will be hands of in-laws. No, it will be clubbed in the hands of parents, not in-laws. Parents. Minor's income is always clubbed in the hands of parent, if at all it is clubbed. It is not clubbed in anybody else's hand. Okay. So exemption in respect of clubbed income of minor of 1500 per child under old regime. Old regime, by that I mean, now you have the default regime of 115 BSc, right? So if you don't say anything, then we have to pay taxes under that regime. Under that regime, you do not get any exemptions. Parent does not get any exemption for including minor's income. But if a person shifts out of the default regime, that means if he goes back to the old provisions, if he shifts out of the default regime, then he can get an exemption of 1500 per child. This is an annual limit, 1500 per annum. You may think, how small is this? Isse kya hoga? But this is how it is. 1500 per child per annum. Per child. There is no restriction on number of children. Okay, number of children doesn't matter. Questions will say first set of children, twin sons, then was a daughter, this, that, to just confuse you. Okay, but don't worry. In this case, number of children is not a limit. Even if there are 100 children, you will apply this limit for each one of them. I'm just saying hypothetically. Okay, all right. In case the asset transferred to a minor child, excluding a minor married daughter, for no or inadequate consideration, is a house property. House property may spouse and minor are dealt similarly in the sense that the transferor will be the deemed owner under section 27. So if it is a house property, but there is a difference in section 64 1A, which is dealing with clubbing of income of minor, and section 27, which is dealing with deemed ownership of house property transfer to minor, that clubbing, this section 64 includes married minor daughter, but that section 27 excludes married minor daughter. Okay, which means married minor daughter, if you transfer, if it is income, it is clubbed. If it is house property, if it is any other asset, then also it is clubbed under 64. If it is house property, then also it is clubbed under section 64, because married minor daughter does not attract section 27. So it will not be a case of deemed ownership. Even if house property is transferred to married minor daughter, then transferor will not be the deemed owner, and income may get clubbed, but that will happen under section 64 1A. Is it clear? That is, house property transfer to a minor child, normally transferor is the deemed owner. But house property transfer to a married minor daughter, transferor is not the deemed owner. The income will get clubbed, but under section 64. Is it clear? I will just write it again for those who have not understood. We'll just make a table. You can also draw it in your copies. So we were here. So if it is minor excluding married minor daughter, and if it is married minor daughter, this is other minor. Okay. And what you have asset transferred is any asset. Then income from that asset is clubbed under section 64. Here also clubbed under section 64. Income from house property, in this case, is not 64 but section 27. Transferor becomes deemed owner, but in this case it remains 64. Transferor is not deemed owner. So the whole catch is about this, that this applies to any other minor but not to married minor daughter. Is this okay, everybody? Okay, I think it's okay. All right, let me go back. So break लेने वाले हो, tech support. Yeah. Sir, break will happen in another another 10 minutes, if it's okay. Otherwise, we'll have to take break now. Okay, ma'am. 10 minutes is okay. 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 Clubbing of income arising to minor. This is a small sum just to apply your mind. Okay. Anybody who is feeling very sleepy, please read this. Please read this. Karan has 3 minor children, 2 twin daughters aged 12 years, 1 son aged 16 years. This kind of information is only misleading, doesn't make any kind of sense. All you need to know is 2 plus 1, 3 bache, three kids. Income of twin daughters is 2,000 per annum each. That of the son is 1,200 per annum. Wife Karina has transferred her asset, her flat, which is house property, to minor son Kairav. So, mother transferring house property to minor son. This is a question of out of natural love and affection. And we understand this is free. This is a gift. Okay. So, gift means what is going to happen here? Deemed ownership, section 27 will apply here in the hands of Karina being mother. Okay, flat was let out on the same day and rental income from the flat is 10,000 per month. So this rental income must be coming into Kairav because he is now the owner of the flat. But deemed owner will continue to be Karina by virtue of section 627, and therefore she will calculate income from house property on this and pay tax on that. Okay, compute the income in respect of minor children to be clubbed in the hands of Karan and Karina. Assume Karan's total income is higher than Karina's total income before including the income of minor children. So this piece of information helps us to understand that who will it be clubbed with, Karan or Karina. If Karan's income is higher, then it will be clubbed in the hands of Karan. Okay. Another piece of information, both Karan and Karina exercise the option of shifting out of default regime. Shifting out of default regime means they will go back to old provisions. Okay. So, all right. Now, what do we need to do? We need to understand what is the income to be clubbed in the hands of Karan and Karina. Now, one thing we are clear that, okay, yes, per child exemption, everything's fine. See, there is one very, important difference of what happens when Section 27 applies. Because had Section 27 not applied, okay, in this twist, in this thing of, who will it be clubbed with? We would have said Karan because Karan's income is higher, and even Karina's gift of flat to minor would have got clubbed with Karan just because Karan's income is higher. Yes, it is because of Section 27's interplay that Karina is deemed to be the owner of this house, and therefore the income will be clubbed with Karina. This is a unique situation where minor's income is getting taxed in the hands of, there is something in both the parents that you need to calculate. Some part of income is getting clubbed with each of the parent. Okay, so to say. Otherwise, normally you see which parent's income is higher and you club with that parent. So when they say calculate the income to be clubbed, normally we need to calculate the income of only one parent. Other parent is irrelevant because the clubbing will happen only in the hands of one parent. But in this situation, because of Section 27 bringing Karina also into the picture, we will have to calculate the income of both Karan and Karina. Some part of income will be with Karan and some part of income will be with Karina. Let's see. Firstly, when we see the minor daughters have 2,000 per annum each. So two daughters, so 4,000 rupees of income. Okay, 4,000 rupees of income. And there is 1,500 exemption because they are under old regime. Old regime means they are entitled to 1,500 per child exemption. So they'll get 1,500 into 3,000 of exemption, and then 1,000 will be taxable. Okay, from these daughters. Then we come to minor son. Minor son, he is having other income of 1,200, which is okay. And there is one income of 10,000 per annum, but that 10,000 per annum is not of the minor child in the first place. Somebody else is the deemed owner, which is Karina. Okay, and here they have asked us to calculate the income only under Section 64(1)(a). They have asked us only under 64(1)(a). So if we give a note that income from house property will be clubbed with Karina because she is the deemed owner under Section 27 and Section 64 does not apply, then we do not even need to calculate the income from house property. And in this calculation, we can just proceed with 1,200 rupees of other income of the minor son, give him exemption. We could have given 1,500 exemption, but we cannot give exemption more than the income itself. So the exemption has got limited to 1,200 only, which is the amount of income. And the resulting outcome is nil. Total income of minor children to be clubbed with Karan is 1,000. Is it okay to everybody? Okay. All right. This is very simple. Actually, clubbing falls under simple chapters. Okay. Next, we do cross transfer. Cross transfer is very, very nice. Let's see what is happening. There is no section governing this. It is coming from a case law. Okay. So suppose A is gifting 50,000, Mrs. Karina with not clubbing Y. C, Mrs. Karina is paying tax on income from house property in the last example, but not by virtue of clubbing under section 64(1)(a), but by virtue of being a deemed owner under section 27. Question asks us compute 64(1)(a) implications. So we have not computed Karina, but we should write a note that why we are considering Karina out of this, because we are applying section 27. Is it now clear? Okay. All right. I hope you are liking the class. Please give me a thumbs up. And I hope more than like or dislike, you're at least understanding what's happening. Okay. Okay. Thank you. Okay. A is making gift of 50,000 to wife of his brother B. A is making gift of 50,000 to wife of brother B. So, wife of brother B, Mrs. B. B is brother of A. Okay. And B is gifting shares of foreign company worth 50,000 to A's minor son, Master A. Okay. Both are giving 50K, 50K. If A had given 50K to Master A, then it would have been clubbing of minor. If B had given 50,000 to Mrs. B, then it would have been clubbing from spouse. So what they did, ki bhai, we are family. Let us plan it like this. Ultimately, we want value worth 50,000 to reach our respective relative. Okay. So you do something. You give to my wife. I give to your minor son. Okay. So in this way, we will both avoid clubbing provisions, because brother's wife or brother's son is not covered in clubbing. We can do it. Okay. Moreover, these relations are covered by the protective fabric of section 56 to 10. There is no tax even there. So very good. Let us do this. Okay. In order to avoid this kind of circuitous method of evading tax, avoiding tax, Supreme Court, in the case of Keshavji Morarji, you need not learn the citation. Okay, what is this citation? I'll just tell you briefly. It's not relevant for your exams. I'll just tell you. What is this citation? Has anybody seen this kind of thing before? 1967 in brackets, 66 ITR 142. Does anybody know how to read this? What it means? It's not for your exams. It's just a general piece of information that I want to give you, because you people are CA students. Okay. See, 1967 means it is a case reported in the year 1967. 66 means it is ITR, means ITR is income tax reports. There is a compendium of case laws. So in this circulation, ITR, 66th volume at page 142, reported in the year 1967, gives this case law. Okay, so this case law has been reported in the 66th volume of ITR at page number 142 in the year 1967. Did you understand? This is a way how we go to find a case law, because there's so many case laws everywhere. If you want to read this, where will you go? This citation is the address of the case. Where will you go to find it? Okay. Relevant for you? Not relevant for you. So ignore it. Okay. Basically, this case tries to say that if the two transactions are interconnected in such a way that it can be said that the circuitous method was adopted as a device to evade tax or avoid tax, they seem to be connected transactions done to just avoid tax, then clubbing would be attracted. Clubbing could be attracted. So this is what the Supreme Court said. Therefore, what will happen is the house property which Mr. A gave to Mrs. B, income from that house will be clubbed with Mr. A, and will be clubbed with Mr. B. Will be clubbed with Mr. B. Income from the house property gifted by Mr. A to Mrs. B will be clubbed in the hands of Mr. B, because that is how we would normally want it to be. And the dividend from the shares transferred to A's minor son by B would be taxable in the hands of A. assuming that A's income is, in this case, you need to see whether A or Mrs. A, because minor's income will be taxable in the hands of either of the parent whose income is higher. I'm assuming Mr. A's income is higher than Mrs. A. So in that case, Master A's income would be clubbed with Mr. or Mrs. A, in this case, Mr. A, even if the asset was transferred from B. Okay. This is a case of cross transfer. Now I'll give you one twist. This was a plain vanilla case where the value of cross gifts involved was the same. It was 50,000 in both the cases. House property ho ya shares of foreign company, both were yielding income of 50,000. So you could easily cross it. You could easily find that this is a circuitous method and you could easily do the clubbing. What happens if the values are different? What happens if in this example, the values are different? The value of income which is passed by A to B is suppose 70K. And the value of income which is passed by B to Master A is suppose 50K. Then what happens? Does anybody know what happens if the value of cross transfer is not same? What if the value of cross transfer is not same? What if the value of benefit inadequate to hey, it's a gift. It's inadequate consideration in any case. Correct. Now, from the perspective of 56 to 10, again, they are relatives of each other. So no implication in the hands of the transferee. But from a clubbing perspective, the common of the two or the lower of the two, which is 50K in this example, 50,000 rupees. 50,000 rupees is what is going to be clubbed in the respective hands. Okay. If the values of cross gifting is not the same, then the lower of the two or the common transaction value will be clubbed in the respective hands. Ignore 20K's clubbing, which means 20K will continue to be clubbed, continue to be taxed in the hands of the person who is actually earning the income. So if 20K's benefit will be, extra 20K benefit is being received by Mrs. B, then it will continue to be taxed in the hands of Mrs. B. So in this case, 50,000 will be taxed in the hands of Mr. A. 50,000 of B's income, Mrs. B's income will be taxable in the hands of Mr. B. But 20,000 of Mrs. B's income will remain in her hands because it is not the common transaction value in this cross gifting. Is it okay? Is it okay? Okay. 50-50 understand. 50-50 you understood? Or between friends also can this happen? Between friends, if you do now, you will not do it. I'm telling you why. Because the Keshavji Morarji's first premise was that you are adopting this circuitous method to avoid taxes. Okay. Between friends, when you do this kind of transaction, what happens is the transferee anyway has to pay tax on the gift under section 56 to 10 because friend is not a relationship. Given there, friend is not a relative as per that definition. Okay. So, and I'm assuming if you really want to avoid some taxes, you will do it for a value more than 50,000. So I'm assuming the conditions of 56 to 10 are met. In that case, the respective transferees will have to pay tax on the gift value itself, on the 50,000, on the gift value itself. Okay. So it is not going to be a tax planning mechanism anymore. Right. That's why when you see these examples, you will find between, weird set of relatives only, for which you will avail one part, at least the transferee will avail benefit under 56 to 10. Then we will see whether the income will get clubbed in the hands of the transferor or not. For that, we will apply these provisions. Okay. So it can happen, but nobody will do like that. That's what I was trying to say. If 50 is transferred to Mrs. B, somebody's writing something. Wait. If 50 is transferred to Mrs. B and 70 to minor, then 50 will be clubbed to parent. 50 is transferred to Mrs. B by Mr. A. And 70 to minor, that means Mr. B is giving to Master A. So 50 will be clubbed with the parent and 50 will be clubbed with basically Mr. and Mr. B. 50 will be clubbed with them. Rest 20 is whose income? Rest 20 is the income of the minor, and therefore it will be clubbed. It cannot be taxed in the hands of minor. By virtue, minor's income is taxable in the hands of either of his parent. So it will go back in this case. In this case, it will go back because minor, the incidence may fall on the minor, but minor's income per se is taxable in the hands of the parent. So it will go and get clubbed again. Okay. All right. Now we talk about HUF case. Okay, 2 more minutes, then we'll take a break. Suppose a member of the HUF, this Hindu undivided family concept, okay, where a karta makes an HUF with his members. Generally, it is made between with family members. Okay, and now even daughters and female members can also be part of the HUF. So, if any member of the HUF converts his any member, not necessarily karta, any member converts his individual property into property of the HUF or throws it into the HUF's common stock otherwise than for adequate consideration, which means any member of the HUF gifts something to the HUF. In normal, simple words, member gifts to HUF. In this situation, income from property will be continued to be included in the total income of the individual. So clubbed in the hands of the transferor. Okay. Gift by member to HUF. Income clubbed back in the hands of the transferor. Okay. And the income from such property shall be continued to be included in the total income of the transferor, where the converted property has been partitioned, total or partial, and income is derived to spouse therefrom. It will be deemed to arise to the spouse from assets transferred indirectly by the individual to the spouse, and therefore again clubbed with transferor. Okay, we will do a sum and then you'll understand what we are trying to say over here. Okay, that in case of partition, so wife is also a member of the HUF and the HUF is partitioned partly or totally, with the result that some of the assets are distributed among the members. When the HUF is partitioned, the assets of the HUF are distributed among the members. Okay, so what happens? Wife will again get something. It will be deemed that husband has indirectly transferred that asset to the wife. Okay, and therefore, whatever income the wife gets on partition of HUF will also go back to the spouse from, who had originally transferred the assets to the HUF. So it can be the other way also. Suppose Mrs. X is also a member of the HUF. She has contributed some asset into the HUF. Income from that asset will be clubbed in her hands. And when the HUF gets partitioned and a part share of that income also goes to Mr. X, then that Mr. X's income will also go and get clubbed in the hands of Mrs. X, as if she has indirectly transferred that asset or income therefrom to Mr. X. Wife could be co-partner. She cannot demand partition. Then how will it be clubbed? She may not demand partition, but if the partition is happening and there was one asset transferred by her, then what to do? If the partition is happening by any other reason, maybe the husband is demanding. So there is nothing like a chart in this to explain per se, because what we are trying to say is member of HUF, okay, if you want a chart. Member gives some asset to HUF. Income clubbed in the hands of the member. Okay. HUF, second situation, HUF got partitioned and assets distributed among members. Mr. X, Mrs. X, Master X. Okay. in that case, income of Mr. X will be with Mr. X. Income of, and Mr. X, suppose Mr. X had transferred the asset to the HUF. So income of Mrs. X will also get clubbed with Mr. X, assuming that the asset has been indirectly transferred by Mr. X through the HUF to Mrs. X. And income of Master X will be clubbed with Mr. or Mrs. X depending on whose income is higher. Is it okay? Ambeshwari chart के साथ, is it okay? Basically, clubbing is happening over here. I'm showing with blue arrows. This is the clubbing which has happened. Mrs. X's income has got clubbed with Mr. X. Master X's income will also get clubbed following minor income provisions with Mr. or Mrs. X, assuming Mr. X's income is higher, so with Mr. X. Okay. Please didn't understand. I'm explaining again. Mr. X is a member of an HUF. He has contributed an asset to the HUF. Okay. Income from the asset will be clubbed in the hands of Mr. X being the transferor. Okay. This clubbing, this one level clubbing has happened. Okay. All the clubbing I'm putting in blue ink. This one level clubbing has happened because income of the asset has gone back. Income of the from the asset transferred to the HUF has gone back to the income of the transferor. Okay, transferor. Income has got clubbed with transferor. This is the first transaction. That is contribution of capital to the HUF. Second transaction is when the HUF is getting partitioned totally or partly, whatever, and assets are getting distributed among the members. I'm assuming this family has 3 members, Mr. X, Mrs. X, and Master X. So Mr. X's income from the partition will remain with him. Mrs. X's income will go to Mr. X, assuming that the asset has been indirectly transferred by Mr. X to Mrs. X through the HUF. Okay. And Master X's income will get clubbed with Mr. or Mrs. X depending on whose income is higher, assuming it is the first year of clubbing of minor. Otherwise, whoever parents clubbing is already happening, that is going to happen in subsequent years also. So I think now everybody's understood. So understood, ma'am. Chalo, very good. Okay. So thereafter, in this, we are now on just the fag end. We are now at the fag end before we do some sums. And I just hope you all are not very bored, but this was very important to discuss the concepts very well. We have even done some sums while we were discussing the concepts. So section 61 versus 64. If this, I have to just quickly summarize. It's not a very important slide, just you can, it's a summary kind of what we have done. 61, when we were talking about revocable transfer by any person, we were talking about revocable transfers only, except those which are revocable only on the death of the transferee, because that is deemed to be irrevocable. It was on any person, so there was no relationship requirement when we were doing 60 and 61 sections, the first 2 slides. But when we started with 64, we got a lot of relationships. We got spouse, we got son's wife, we got minor child. Okay. And that applied there. But when we were doing this, then nobody told us whether it is a revocable or irrevocable transfer, which means when we see 64, then revocability doesn't matter. Relationship matters more. But when we see 61, then revocability matters and relationship does not matter. Whether relative or not doesn't matter. Any person. But 64, relative matters, revocability does not matter. Okay. Clubbing provisions are attracted in respect of income arising from assets transferred. However, income on accretion of income arising from transferred asset. That is, interest on FD will get clubbed, but interest on interest will not get clubbed. Okay. Except in case of minor child, because unka to koi bhi income will eventually get clubbed. So that you need to see. If ma'am some other asset is given to wife, then will cross transfer happen provided Mr. X also transfer property. Some other asset means it's not only about house property, any asset. If it is a cross transfer situation, if it is subjective, because isme there is no deemed provision, there is a case law, which means you need to see the facts of the case, whether you can prove that the mechanism is there to avoid taxes. So I didn't really understand your question to that extent. Okay. Then Mr. X, just one small example. Mr. X transferred debentures of 50,000 carrying 10% per annum interest to his wife. Interest income of 5,000, which is 50,000 into 10%, will be clubbed in the hands of Mr. X, who's the transferor. But if wife deposited that interest of 5,000 in fixed deposit and further earned 8%, that means 400 rupees interest, then that interest will remain in the hands of Mrs. X and will not get clubbed in the hands of Mr. X. We just did one example of like this. So this is also done. Okay. Okay, so let's just go for a break and then we'll come back and practice. When you come back, if you come back early, it's 4:35 now. Please do come back within 4:40. Load in the example, ma'am, HUF, this, that. Okay, please you put it in the BOS portal. We'll take a break now. Okay. When you come back from your break, we are going to resume within 5 minutes because we have to also solve some sums. Okay. When you come back from the break, please try to read this summary. This is what we have already learned, nothing new. मैम मुझे रेवोकेबल इरेवोकेबल नहीं आया समझ. ओके ठीक है, we will come back from break and then understand. 5 minutes of break. 4:40 we are to come back. चलो. Hello, hope you all are back. Please give me a thumbs up to let me understand if you're back. You must be wondering, break तो हुआ ही नहीं. Such a small break. Okay, some people have come. The ones who have come, please see the screen. Okay. Okay. Please see the screen. This is a summary of all that we have already done. We are now going to apply this in practice. We are going to solve some sums. Okay. And also, I hope you have downloaded the assignments PDF from the BOS portal, because the questions are there. I don't want you to waste time copying the questions in your copy. Please download that. If you have not already downloaded, please download the assignments PDF and see the questions from there. All we will focus on is doing the solutions. So please have a copy, pen, and calculator with you. This screen, if you have already in the PDF, very good. If you do not have, then you click a photo on your phone. This we will apply when we will be doing sums. Okay, you already know all this, but because it's a newly learned concept, this will help you to update. It will help you to apply this when you do the sums. It's given with section references also. I did not focus too much on the section numbers when we were doing the concepts, because I felt that right now learning the concepts is more important for you. But in this summary, the section references are also given, if that helps you. Otherwise, it's not required. Just section 64, section 62, that's enough. Sub clauses you need not know. Okay. So let us start with the sums. All right. First question, very simple, very simple. Compute the GTI of Mr. Ajay and Mrs. Amy, Amy is his wife, from the following information, assuming they exercise the option of shifting out of the default regime. Shifting out means they are going to use old regime. Old regime means we need to apply 1500 exemption per child if relevant. Otherwise, as such, in clubbing provisions, there is no major difference. Okay. So they want us to do both. They need you to do Mr. Ajay and they need you to do Mrs. Amy. Okay, Mr. Ajay and Mrs. Amy, both. Salary income of Mrs. Amy, it's already computed. Salary of Mrs. Amy. So you can just put it, because see, we need to, if there are minor children involved in the question, which we can see that there is a Yug and there is a Yashi. So we need to find out first that income of which parent is higher, because only then we will be able to club. So your primary duty is that you jot down the other income particulars in the solution first, because we need to find out whose income is higher before clubbing the minor's income. Okay. So there is a salary income of Mrs. Amy. You put that. If it is computed, means they have already calculated the standard deduction and everything. You don't need to do it again. That's another difference. Which regime you choose will create that difference also, whether the standard deduction is 75,000 or 50,000. But here it is a computed salary income. If they have mentioned computed, means you do not need to do those things again. You can just simply put 2,30,000 in the hands of Mrs. Amy as computed salary. Mr. Ajay is earning some professional income of 3,90,000. Okay, we do not see any substantial interest company and 20% holding and all those things. So that means salary clubbing is not in the question. Okay. All right. Then income of minor son Yug from company deposit. So if we see Yug's income is 15,000. Okay. And Yashi's income is from special talent. Special talent income is not taxable in the hands of Yashi. It is not going to be clubbed. Okay, because it was an exception. So Yashi's income will be clubbed in her, will be taxable in her own hands. And then there is a interest income received by Yashi on deposit out of a special talent. So suppose she has earned 32,000 on her special talent, that cannot be clubbed. But if she has deposited 32,000 into something and earned interest on that, then that interest income of 3,000 will be clubbed with the parent whose income is higher. Okay. Recoverable, irrecoverable, Bhavna. Okay. Revocable, irrevocable, you meant. After this sum, I'll explain. Okay. So Yug and Yashi's income. Yashi has one more income, which is 3,000, which she has got by investing this deposit out of her special talent income. This should be clubbed. And then Yashi has also received a gift from Rani, who is Amy's friend. So she has received gift from mother's friend. Mother's friend is not relative. So she has received a gift from mother's friend, 2,500. So that is, I mean, covered within 56 to 10. It should be covered because mother's friend is not relative. But the gift is very small. It is a 2,500 rupees gift, which is less than 50,000. So it is not taxable by virtue of 56 to 10 exceptions. Okay. So if I have to see, then whose income is higher, Ajay or Amy? Then Ajay's income is higher, 3,90,000. So clubbing will happen in his hands only, and we do not now need to calculate Amy's income. Now to decide what income is going to be clubbed. So minor son Yug's income will be clubbed, yes, but he's in old regime, so you give him 1,500 of exemption. Minor daughter Yashi's income will not be clubbed because she's earning out of her special talent. So it will not be clubbed. And interest from Yashi out of that income, yes, that will be clubbed. Give 1,500 of special exemption of this 1032 exemption. And gift received by Yashi, this is not taxable because it is less than 50,000 under 56 to 10. Okay. So ultimately, what all have come into the picture? Ultimately, it is 3.9 of Ajay's income plus 15 minus 1.5 of exemption plus 3,000 minus 1.5 of exemption. Total, who can tell me what is the total income? 4,05,000. Has everybody got that? Has everybody got that? Okay. Okay, how should the solution look? Solution should look a little more beautiful. Obviously not like the scribbling I have done. Solution should look a little more beautiful. I'll upload the solutions later on the same BOS portal, so you can have it with you. Okay. Why E point is clubbed? Where can I get illustrations? Illustrations, questions are in the assignment notes uploaded on the BOS portal. Please download from there. And solutions have not been uploaded yet. We will solve them in the class first, then we will upload them. Then I'll upload them, then you can download from there for reference. Ma'am, why E point is clubbed? Interest from bank received by Yashi on deposit out of a special talent. Because see, income from accretion is not tax clubbed normally. But if that accretion has happened to a minor, then per se, by default, minor's income is supposed to be clubbed. Okay. In fact, it is because of the special talent, D is excluded. Otherwise, even that would have been clubbed. Okay. Pallavi. Is 1,500 exemption only available if clubbed with parents' income, not for self-income? What kind of question? 1,500 exemption is available for clubbing of minor's income. It is available on clubbing of minor's income. It is not available for anything else. And it is available only if you shift out of the default regime. So there is no question of it applying to self-income. It is a benefit because, I mean, the law says, okay, you are clubbing your minor's income. I mean, and without any action of yours, without any attempt to avoid taxes, you have to pay tax on your minor's income. So at least let me give you a benefit of 1,500 per child. Self means minor. You mean to say if minor pays tax on his own income, will he get 1500 exemption? Is that your question? No. If minor pays tax on his own income, there is no exemption. And exemption is given to parent who has to pay tax on clubbed income of minor. 1500 exemption to special talent person. Why have we have given? Because 1500 exemption, that special talent person Yashi is also earning interest from bank. We have, if you see, I have given 1500 exemption to the 3000 rupees that she has earned in point E and not to the 32,000 rupees that she has earned in point D. Is it okay? Parents exempted to parents. I don't know what that means, but whatever. So 1500 exemption to special talent son, you've understood. His daughter is specially talented, that's okay. But the exemption is given not to her special talent income because that is not clubbed. The exemption is given to her general income, which is clubbed. So suppose her general income was only 1200. In one sum, when we were doing, we did that her general income, the general income of the minor child was only 1200 rupees, and the special income of talent was something, say whatever, and we gave her exemption only up to 1200 because only to that extent it had got clubbed with the parent. In order to make parents feel happy while paying tax on behalf of minor, 1500 exemption is provided. Right. Yes. Absolutely right. And only under the old regime. If you shift out of the old new regime, if you shift out of 115 BSc, that means. Ma'am, but these 3000 deposit by Yashi is out of special talent money. I understand, but she's a minor, na? Who will pay tax on minor's income? Income from accretion is not subject to deeming clubbing provisions, but minor's income is per se clubbed. In general, it is clubbed. Special talent was an exception. General rule is club of minor's income. Do you understand? Okay, enough of this. Chalo, next sum. Okay, illustration 2. So why point D not include? Because point D is special talent income. There is an exception in the law. Okay, Ruk. The way to say minus income is that all income is to be clubbed. Special income is not to be clubbed. Okay, it is different from how you see spouse or son's wife. Minor's case is very different. So point D is special income, so we didn't club. Point E is regular income, so we clubbed. Is it now okay? Okay. Second question. Please read the question. If you have the questions already, then I will shift the screen to the solution page now, where we will solve the sum. Then I won't display the question anymore. You have question? Okay, so I'm moving the screen. Please read the question. Please, others don't draw. मजा आता है ना इस सब में. Please don't draw on the screen. Let me draw. Okay. You have a situation husband, wife, minor child. Okay, let me read the question. Husband, wife, and minor child. Which means आपको minor का तो income लेना ही पड़ेगा. In this situation, you should understand that, as I told you, you will need to find out which parent's income is higher. So you will need to calculate the parent's income also. Okay. So our approach should be to calculate the other income other than minor's income of the parents first, so that we first understand in whose hands the clubbing will happen, and then we accordingly club. Okay, that's why we should make a column when we get a sum like this with a full family. We should make columns for each of their hands. Even if they ask you, only find out how much of A's income will be clubbed with the parent. Even if they ask you that, you need to calculate the income of both the parents, because you need to first understand in whose hands the clubbing will happen. Okay. Chalo, let's read the question very quickly. Mr. Mahi, during the previous year 24-25, has done the following transactions. He has a fixed deposit of 5 lakh in Bank of India. He instructed the bank to credit the interest of 9% to Nirvan, minor son of brother Sohail, to help him in his education. Okay. So, minor son of brother Sohail. This is not a case of clubbing under 64, and there is no case of cross transfer in this case. We don't have enough information that Sohail has also given something to Mr. A, or Mr. Mahi or Arhan or whoever. So then this is a case of section 60. That means you have transferred income without transferring asset. You have transferred income, right to receive interest on deposit, without transferring the fixed deposit per se. Okay, this is a case of section 60. So it will be clubbed, but under section 60. Okay, so 5 lakhs and 9,000, 9% interest. What is that amount? 5 lakhs, 9% interest. What is that amount? $45,000, right? So just park that, just mention it somewhere, 45,000. Let's move ahead, because we'll have to do the, heads of income also. So let's read it entirely. Mr. Mahi holds 75% profit share in a partnership firm. 75% means more than 20%. It's a case of substantially interested firm. Okay. Mrs. Mahi receives a commission from the firm for promoting sales of the firm. Remuneration can be salary, commission, bonus, whatever name called. Okay. So commission is included. And she possesses no technical or professional qualification. So this is a case of clubbing. Whatever Mrs. Mahi receives will be clubbed in the hands of Mr. Mahi. Mr. Mahi gifted a flat to Mrs. Mahi on 1st April, and Mrs. Mahi's income from house property, which was computed. Computed income means they've already deducted standard deduction and everything, is 52,000 from such flat. They do not have agreement to live apart. That means this will be a case of deemed ownership under section 27. Correct. And 52,000 will come back to Mr. Mahi. Mr. Mahi gifted 2 lakh to his minor son Arhan, who invested the same in a business, and he derived 20,000 from the investment. Now, if Arhan minor is so capable that he can apply his skill and do a business, then it should not be clubbed. So 20,000 will not be clubbed. Okay. Then Mr. Arhan derived an income. No, wait. Sorry. I was reading point E. D, in point D, what happened? Mr. Mahi gifted 2 lakh to his minor son, who invested the same in a business and earned a return from the investment. This is a return from investment, which is going to be clubbed, because here there was no application of skill. Next point, Arhan derived an income of 20,000 through business activity involving application of skill. This is a case of an application of skill. Here there will be no clubbing. Then during the year, Mr. Mahi got a pension, monthly pension of 10,000. And he had no other income. Mrs. Mahi received salary of 20,000 from part-time job. and examine implications of each, assuming they exercise the option of shifting out. Shifting out means old regime. So, okay. So let's first calculate the salary income of each. Okay, salary of Mr. Mahi. Mr. Mahi's salary, he is saying monthly pension of 10,000. So 10,000 into 12, 1,20,000. Okay, and then we will have to do a standard deduction because it is old regime. So he will get only 50,000. So his income from salary is 70,000. And Mrs. Mahi is earning 20,000 from a part-time job. This is not the job which he is, this is not the partnership firm remuneration that she's getting. She is doing a part-time job herself, and there that income will be taxed in her hands only. She is receiving 20,000 per month, so 20 into 12 is 2,40,000. And because she is also under the old regime, so she is getting a standard deduction of 50,000 under section 16, and this is 1,90,000. Is it okay so far? Then we add income from house property. Income from house property, section 27. Mr. Mahi is the deemed owner. Computed income is 52,000 and not taxable in the hands of Mrs. Mahi. Okay. Then we do interest on bank deposit. Somebody had already calculated 45,000. So it is getting clubbed under section 61. Sorry, section 60, transfer of income without transfer of asset. 45,000 going to be clubbed with Mr. Mahi. Okay. Then there is a commission received from partnership firm. Somebody may tell me, ma'am, you calculated salary income above. You did not consider the commission from partnership firm. Why? Can somebody tell me? Yes. This is taxable as PGBP. It's not a salary income. Okay. Because it's a partnership firm. So PGBP, therefore we are doing it separately. No employer-employee relationship. Very good, very good. So we are doing every head one by one. We did salary, we did HP, we did IFOS. Now we are doing PGBP. Okay. So when we are doing PGBP, we found commission from partnership. Mrs. Thing should also be clubbed. So we are going to club it. What was her thing? 25,000 per annum. So we will club that also. So how much so far? How much is the income of Mr. and Mrs. Mahi before clubbing minors income? Mrs. Mahi is 1,90,000 because nothing else got clubbed. And what about Mr. Mahi? Anybody has calculated? Anybody has calculated? What is Mr. Mahi's income before? Yes, 1,92,000. Whose income is higher, Mr. or Mrs. Mahi? Whose income is higher, Mr. or Mrs. Mahi? Mrs. Mahi. Mr. Mahi, yes. 1,92,000 is more than 1,90,000, no? So Mr. Mahi. So chalo, Arhan's income is going to be clubbed with Mr. Mahi. That we have understood. Now, what is Arhan's income? Let's understand. So we first find out his income from investment in business. Income. So we will give a subheading minus income. Wait. Here we will put income from investment in business. So investment in business. Firstly, Arhan received how much money? Arhan received 2 lakh for investment in business. That receipt should be taxable in Arhan's hands because he received gift 2 lakhs, more than 50,000. Should it be taxable? Should 2 lakhs be taxable? He received? No. It's not taxable because of 56(2)(10) he received from his father, who is a relative, and therefore this is not taxable. Therefore, this is not taxable. So what he received is not taxable, but the profit he made thereon, how much profit he made thereon? 20,000. Profit on this investment, 20,000, that is definitely taxable. So that should have been taxable in his hands, but because of clubbing provisions, it will come to Mr. Mahi. Okay, when you write in the sum exams, you please don't write under Arhan column. You just mentioned in the notes that it is called clubbed. Okay. So this is profit on investment. And what about this? We are all doing in inner column. Huh? What about his other income? He has got a business activity, income from business. What about that? Income from business. He's earning 20,000 from that also. What to do with that? This was also Arhan's income. Should it be clubbed? It should not be clubbed because it is from special talent. So you put a note that this is from special talent. We are not clubbing. Okay. Then we come to exemption under section 1032 because these people are under the old regime. How much exemption should I give to Mr., Mrs. Mahi and to Mr. Arhan? Master Arhan, tell me. How much of exemption should I give? 1,500 per child. How many children do you have? Do you also count Nirvan? Nirvan is brother's son. Do you also count Nirvan? No, you only count your own children. Correct. So own children, we have information that's only one child. All right. So 1,500 we will reduce from whom? We will reduce from Mr. Mahi, Mrs. Mahi, or Mr. Arhan. Mr. Whoever has paid tax on that minor. And minor's own income will not get any deduction. Please be very careful. Somebody had this very pertinent question that by what happens to the taxes, the income on which minor pays tax himself. Okay, does he also get exemption? So please understand 1032 is not linked to minor. It is linked to clubbing of minor. So it is only going to be availed by that person who is taking the income of minor, which not being the minor himself. Could you please, ma'am, in IFRS, there was a reduction of 15K and 1/3, whichever is lower will apply. But who said this is family pension? This is not family pension. This is regular pension. This is not IFRS. This is salary. Is it okay? Anybody else? Any question? So when we are calculating, let's first complete the sum. If we have got all the information in hand, then what should be the income of Mr. Mahi? We had 1,92,000, then we had 20 less 1,500. So it is, I think, 2,10,500. This continues to be 1,90,000. This continues to be 20,000. Has everybody got this? This is GTI. Okay. Anybody, any questions? Please give very proper notes. I'll tell you where you should give notes in your question, in your exam. And for notes, you can refer my solutions when I upload them. Because obviously I'm not going to dictate it now. You should give a note here. I think you should give a note on every line, depending on the amount of time you have. That salary, you may not give a note because you may just give a note that you are taking standard deduction of 50,000, considering that they are they've shifted out of the default regime. House property, you should give a note on section 27. So there will be a note here. There will be a definitely note here, note 1 on section 27. There should be a note on section 60 that why brother son's interest has been clubbed. There should be a note on commission from partnership, substantial interest and spouse's remuneration getting clubbed since she does not have qualifications. There should be a note on gift received of 2 lakhs not taxable under 56(2)(10). Okay, there should be a note on Profit on investment getting clubbed because of minor 64(1)(a). So there should be a note on that. Okay. There should be a note on income from business not getting clubbed because of special talent. There should be a note on 1500 exemption. This you may not give a note. 1500 exemption because they've shifted out of the old regime. If you want, you can give a note. They've shifted out of the default regime. So in this way, every line more or less has a note. And you give brief notes because it's not an essay competition. And you in DT exam, you'll be really running out of time. You'll be really, really running out of time. So by this practical question, I get more clarity. Yes, Pallavi, that's what it is meant to be. If you allow us to finish the class and then you do the homework sums which I'll give, you will have complete control on this chapter. Okay, the weightage of this clubbing and set of provisions together is 15 to 20% of your entire marks. Okay, questions can be 4 to 6 to 8 marks, and they are very, very simple. Just need a little bit of practice. Okay. Okay. My God. Let us now go to the next question. Illustration 3. Illustration 3. If you are able to, I'm not showing the question. If you can read, then please read, because so that I can just concentrate on the sums here. Solutions here. Question 3. Please read. Tarak. I hope everybody's got that. This is very quickly, huh? This is not a very long sum also. Income from house property, 30% deduction. Yes, sir, you should give. But if the question says that it is a computed income, okay, whether from salary or from house property, then it means they have given all due standard deductions already. You do not need to apply mind. Okay? Okay to all? Okay to all? Okay. Question 3. Tarak has gifted a house property valued 50 lakhs to his wife Jaya. So Tarak has gifted house property 50 lakhs to wife Jaya, who in turn has gifted to Kashvi, daughter-in-law, wife. Okay. House was let out at 25,000 per month. So now she is the owner. She has let it out at 25K per month throughout the year. Throughout the year, they have told you so that you can calculate the income from house property correctly. So now calculate the income. So let's first calculate the income from house property. So it's 25,000 into 12 and less standard deduction of 30%. There is no reference of these municipal taxes and all. So what is going to be the income from house property? If somebody can tell me. 2.1 lakhs. Okay. So if this is the income, now it should be clubbed in whose hands? So actually there are two cases of clubbing which have arisen over here. A, giving asset being transferred to wife and then asset being transferred to daughter-in-law. This attracts 64, this attracts 27. So who should be the deemed owner by virtue of 27 plus 64? Anybody writing anything? Who should be the deemed owner? Rather, who should it be clubbed with? 27 will prevail. So 27 read with 64. The income of 2,10,000 will be clubbed with Tarak. He is the deemed owner. Okay. Chalo, theek hai. Now you tell me what happened to 56 to 10. This person got 50 lakhs ka house property. What happened to 56 to 10? Relative, so not applicable. Okay. ठीक है? Okay, good. So this was an easy sum. Chalo. Now let's do another. Question 4, please read. Question 4, please read. Proprietary business was started by Rani. This will help you clarify the Weber-Vaishali confusion. Okay? Please, the ones who did not understand Weber-Vaishali example, please read this very carefully. You will now understand. Proprietary business was started by Srimati Rani in the year 2022, and on 1st April 23, her capital was 3 lakhs. Husband gifted 2 lakhs on 10th April 23. 10th April is not 1st April, okay? And such sum is invested by Rani in her business on the same day. She invested on the same day. But if you see, if somebody asks you what is the capital as on 1st April 23, okay, then the answer is the capital as on 1st April 23. So Rani's own contribution out of husband's contribution. So capital as on 1st April 23, there is only Rani, 3 lakhs. There is no contribution. Then gift, there came a gift on 10th April, but because it came from husband, there is no 56 to 10. So the gift came of 2 lakhs from husband. And then there was a profit which was earned during 23-24. This is not our previous year, but we need to do to understand the capital as on 1st April 24. So there was a profit which was earned in 23-24, and because as on 1st April 23, there is no contribution from the husband, so entire profit will sit with Rani, will not be clubbed with husband. If anybody has any doubt here, then you will need to stop me over here itself. Why entire 1.5 lakhs is taxable with Rani and not with husband? Somebody has to, I mean, if you don't understand, you have to stop me here. This is capital for tax purpose, huh? Is it okay? Now our actual question starts, because if your previous year is 24-25, then your sum starts here. When you derive capital as on 1st April 24, then your sum starts. That what do you do with the profit of 24-25? How much will be with Rani? How much will be with husband? So if the total profit in this year is 3.9 lakhs, so and this total capital as on 1st April 24 was 6.5 lakhs, then it is going to be allocated between these two in this 4.5 to 2 ratio. That means 3.9 into 4.5 by 6.5 and 3.9 into 2 by 6.5 will be taxable in the respective hands. So this 2 lakh will be added in another previous year. 2 lakh will not be clubbed. 2 lakh, why will it be clubbed? 2 lakh is the, which 2 lakhs you're talking about? This one. This is the gift received. Gift received, not taxable under section 56 to 10. Anyway, this was not taxable. We were talking about the profit of 1.5 lakhs. Who will pay tax? Yes, somebody has answered correctly. 2 and 2. 2.7 lakhs taxable with Rani and 1.2 clubbed with husband. So if you ask me what is the clubbing amount, what amount is clubbed with husband, then it's 1.2. 2.7 though rightfully belongs to Rani. 1.5, why clubbing? Who has done clubbing? Here I am calculating Rani's own contribution. I have not clubbed, that is why it is entirely with Rani na. Nobody has clubbed here. No clubbing. No clubbing. Okay. Sorry. Okay, understood? Understood? Those who have understood, please read question 5. No, question 5 is your homework. Don't read it now. I think it is an application of whatever we have already done. So you can do it and you can do it for homework. And then we will discuss answers in the next class. Question 6 is also simple. It's more about computation of salary income first. So it is about application of your salary principles. So please do it for homework. And the rest of the clubbing provision is very simple over there. So that also you do for homework and we will discuss in the next class. So question 5 and 6 are your homework. And we are now at question number 7 with Mr. R and Mrs. R. Are you all with me on Mr. and Mrs. R question number 7? Please read the question number 7. Is the speed okay? If you find it too fast, you find it too slow, then please tell me. It's okay. Okay, thank you. Question number 7. Who has started reading? Mr. and Mrs. R. So Mr. R has transferred his self-occupied property to Mrs. R, and then he has given his property without any consideration to the HUF of which he is a member. And HUF earned income. Okay, this has application of 64(2) also, HUF also. So those who didn't understand that time, please be very careful. This has application of HUF also. Then Mr. R transferred 4 lakh to his wife without any consideration, which was given as loan to Mr. Girish, and then she earned interest on that. So she earned interest, which was also given as a loan to Mr. Girish. Okay, great. Mr. and Mrs. R both hold equity shares in AMG Limited. This is a case of both having substantial interest. I mean, though individually also they have substantial interest, but if they had only like 12 and 15 and together they were more than 20, then even we would have considered them to be substantially interested. They are also working as employees, and during the financial year, they've withdrawn the salary of this. And we understand that both don't have any technical or professional qualification. Mrs. R transferred shares of RSB Limited to Mr. R without any consideration. Then, on those shares, the company issued bonus shares. So Mr. R sold entire shareholdings and even capital gains. Apart from this, Mr. R has commission income, Mrs. R has interest income. Compute their GTI. Okay. Chalo, one thing is clear, they don't have a child here. So we need to have only 2 columns, Mr. and Mrs. R. Let's start plotting one by one. First of all, the house property, which was transferred to the HUF, of which he's a member. So income from HUF. Income from property transferred to HUF. Who transferred the property? Mr. R. So in whose hands should it be clubbed? Mr. R. Which section is it? 64(2). What is the amount? 50,000. Clear? Gift to wife. 4 lakhs. Is it taxable in the hands of Mrs. R? Anyway, that was an old gift, not the current gift. Okay, ignore it. It was given in 2006. Even if it were taxable, this is not the year to tax it. Okay. So gift to wife, ignore. It was an old gift. Yes, it's a relative case. If it was in this year, then also we wouldn't have put it to tax. But even if there was no 56/10 coverage, but this is a transaction of earlier year, so you can't put it to tax now. Okay. Okay. So loan has been, the 4 lakh ka gift has been given to Girish. Basically, what have you earned during the year? You've earned interest on gift, basically. Interest on gift from husband, she has earned. So interest on gift from husband, if she has earned by giving loan to Girish, then what is the amount she has earned? 3 lakh 50 during the earlier previous years, which was also given as loan. So no, not like that. You will have to calculate on the 4 lakh how much he has earned. 4 lakh of principal money given by husband, on that at the rate of 11%, how much he has earned? She has earned 44,000. This should be clubbed by virtue of section 64. Then she has earned interest on the interest of 3,50,000. So 3.5 lakhs pay 11%. What has she earned? She has earned 38,500, which should be, no, I think you've put a zero extra. Yeah, 38,500, which should remain with Mrs. R. This is not to be clubbed because this is interest on accretion of asset. That is not to be clubbed. Please give a note to that also. Okay, every item will have a note because what you are doing is backed by a reasoning which is only in your head. Don't try to clutter the solution with too much of language. You give reference of notes and put them all at the end below. Okay, don't write too much. If you just say interest on accretion of transferred assets should not be clubbed, it's enough. Okay, write less so that you save time, but do write, otherwise nobody will understand what you're doing. Okay, then Mr. and Mrs. R hold equity shares in AMG and they are employees and they have withdrawn a salary. So one salary has to be clubbed with other, but before that we need to find the GTI, excluding this income. So we will park this question. There is one more capital gain question coming. We will do this and then we'll find out the GTI before clubbing the remuneration. Okay. So what has happened to capital gain? That R has transferred 5,000 equity shares to Mr. R. Mrs. R has transferred to Mr. R. Be careful, huh? Every time Mr. R has been transferring. So what happens, people in that same frame of mind, they go and okay, Mr. R only is transferring. So be very careful over there. Okay. Right. So what has happened? 5,000 equity shares have been transferred without any consideration. And the company issued bonus shares again. Okay. Now transfer of equity shares is no 56 to 10 because of relative. Otherwise, they would have given information about fair market value of the shares also. But relative, therefore, they have not given also anything. And that transaction also happened way back. That is not taxable now. What is taxable now is that when you sold those shares, you sold 8,000 shares, which is 5,000 given as gift and 3,000 bonus thereon. So 3,000 is the accretion. So capital gains on 5,000 shares, which were given as gift. Okay. So 5.2 into 5 out of 8. Because 8,000 are your total number of shares, out of which 5,000 shares you got as gift. So capital gains on 5,000 shares, this should be clubbed with Mrs. A.R., who is the transferor. How much is it? How much is it? 3,25,000. And capital gains on 3,000 bonus shares, which is income from accretion. So you can give a common note to interest on interest and capital gains on 3,000 shares. That income on accretion of transferred asset is not clubbed. 5.2 into 3 by 8. How much is that? Which will remain with Mr. R. 1.95. It's going to remain with Mr. R. Okay. So far, everybody's okay? Now we see there is in the sum, there is given some other income reference. Other income may, who has what? Mr. R has commission of 4 lakhs and Mrs. R has interest of 3,30,000. So what is the GTI of these two people before clubbing the remuneration? If somebody can tell me, please. Hmm? What is the GTI? Sorry. How much did you say? This is 4 lakh, huh? 6,89,000. 3,29,000 for what? 6,93,500. That's right. This one is right. 689 and 693.5. Okay, now we talk about salary income. Salary income, now both of them happen to be substantially interested. So we need to take whoever's is higher. This person is higher, Mrs. R is higher. So clubbing of Mr. R's salary will go with Mrs. R. So Mrs. R's own salary is how much? Mrs. R's own salary is 2,70,000. So it's going to be with her only. And Mr. R's salary of 3,20,000 will also go with her. But this is not computed salary. Okay. This is not computed salary. You will have to give them standard deduction. Assume that they are under the default regime. Nothing is mentioned in the sum, so you give an assumption. Assume default, because you cannot assume that they've shifted out of default. You have to assume default if you have to assume. Okay, na? So you have to assume default. Give them 75,000 of deduction each. How much is the thing? Otherwise 50. Yes. Suppose in this question, I would have assumed that they are shifting out of. See, when they don't give me in the question that they've shifted out of, then I don't have the right to assume that. Na? So, but I should assume they are in the default regime. But yes, if they are shifted out, then you would have reduced 50,000. Okay. That is also one point from Hardik, that because it's about qualifications, nobody's mentioning anything, then we can assume that they are both qualified enough. You can assume if they are both qualified enough, then their respective income should be with them and should not be clubbed. Mention that assumption. Mention that assumption. Okay. Because examiner wants to see if you know this provision. So if you mention the assumption that this is why you've not clubbed, then also it's okay. And if you do not mention anything, then it's wrong. You should, in any case, you should mention. Okay. So what is the salary after 1.5 lakh of standard deduction? What is the salary income? What is you're talking about the total income, Rathi Malini? Total income of Mrs. R have you given? Okay. So what is it? 1,133,500. Okay. Everybody is okay? Okay. Everybody is fine with this? We move on. Give me a thumbs up, please. Next question, please read. Income, illustration 8, Sarthak. This is also an HUF sum. Hardcore HUF sum, very simple, but hardcore HUF sum. Ma'am at 6, another class is there. Yeah, okay. So it's 5:34. Okay. So we have only 2 more questions, out of which question number 9 I'm going to give you as homework. So question 8 is the last question that we are doing for today. So let's just hurry up. Sarthak is a member of HUF, which is he, his wife, and his major son Arjun, and minor daughter Aditi. Okay, please understand major son Arjun. So you don't see from a different lens. He's an ordinary individual. Okay, only minor daughter Aditi you need to do clubbing. So Sarthak has transferred house property to his HUF without any consideration. At that point of time, whatever income from the HUF should have been clubbed, but there's no information given. Okay. Only on 1st October 2024, there is a partition and the property is being divided between the 4 people, which is Sarthak, his wife Juhi, his major son Arjun, and his minor daughter Aditi. And they are all having equally income of net annual value of the property is 1 lakh. So everybody is getting 25K. Okay. Now who is going to pay tax on this? So Arjun is major. He should pay tax on his own. So this is not going to be clubbed. Wife will be treated as indirectly transferred by the husband to the wife, so will be clubbed with Sarthak. Aditi, now because wife's income, and I'm assuming there is no other income of Sarthak and Juhi's income has also got clubbed with Sarthak. So his income is higher. So I'm assuming Sarthak's income is higher than Juhi's. So Aditi's income will also get clubbed with Sarthak. So basically, Sarthak has to pay tax on 75K and major son Arjun has to pay tax on 25K. Sorry. There is one catch here. I'm sorry. There is one catch here. When they say in net annual value, they have not given the computed income from house properties. We need to first give the 10% deduction. Sorry here. We need to first give the 10% deduction, calculate income from house property. How much is the income from house property after 30% deduction? And for 6 months only you need to see, because it started on 1st October, so it has got partition. So they have earned only for first 6 months. 70,000 is for the whole year, but the income has been earned only for 6 months because 1st October it has got partitioned. 35,000 when you divide into all these 4 people, it will be 8,750 each. Okay, this one, and he has to pay tax on 8,750, 8,000 into 3, and he has to pay tax on 8,750. I'm assuming they are in the default regime, so you give him 1,500 standard deduction for Aditi. Is it okay? Is it okay? 85K. What is 85K? What is 85K? 15K standard deduction. 15K. Why? 1 lakh minus 15K. Why standard deduction? Why 1 lakh minus 15K? Why have you given part of the year standard deduction?